Cav. But on your desktop, probably somewhere or in the install files, let me see if I can find mine for you. I'll show you what it looks like. Um, you're going to have, oh, I wonder if this is it. How to install a clean NinjaTrader and Nexgen files. Yeah, that's probably not it. Um, I'm looking to see if I can find it, and I'm not sure where it is. My brother and I have done so many different things on this computer, but you should have a file with your name on it that runs and goes through. I would say just let Jason do it. It'll be easier than me trying to figure it out. And that's okay. We delete files sometimes. I've done it. Good morning, everybody. Cav, sorry, that wasn't a lot of help, was it? As is the case when I'm trying to play tech guy. Man, I wish I was better at it. I'll get better at it over time. Good morning, Gary. Glad you're back. Hope you're feeling well. Hope everything is doing wonderful. Guys, good morning and welcome. It's awesome to have you guys here. I hope everybody had a nice weekend, relaxing weekend. Hope you got to hold hands with somebody or whatever makes you happy. Guys, we are going to focus the whole day on being able to name the trades we're getting into. Over the last couple weeks, there's been a lot of instances where I ask people, well, what kind of trade is that? And they can't tell me, which is okay. You don't have to be able to tell me the answer to what type of trade it is unless you want to be able to manage the trade, unless you want to be able to know what's going on. Oh, did you, Grant? Grant, there has been construction going on forever here. Did you come through up 75? I guess it depends. If you were in Houston, it's always there. If you came up through Dallas, yeah, there's always construction here as well. Um, Guys, we talk a lot about entering the market, and that's really our focus. Dallas to Amarillo, right on. So you probably took 35 up then to head towards Amarillo. You missed me. I'm a little more north. But yeah, there's always something going on in Dallas. It's been under construction since I was 15, which is a long time ago. Um, Guys, we're going to talk about a couple different things. We're going to talk a lot about advantages, and I want you guys to start talking to yourself in terms of advantages. Because even if you can't name your trade, what happens if you understand what you've got going on going into it, then it gives you a better opportunity to manage it. And we start our advantages by going and checking news every morning, guys. Today is Monday, April 8th, and there's nothing going on. There's no big news releases, which is cool. It means that there's nothing for the market to go silly about. We don't really see it until Wednesday, 8:30 a.m. So we'll keep checking it every day and coming through. But we're going to go to the education page, guys. This is the Nexgen education page, and this is where all the answers come from. And I'm just going to do my slideshow, and we're going to go through it. And guys, I'm going to share a lot of pictures throughout the day. I'm going to talk about a lot of different concepts, but this is what I want for today, if it's not too much trouble. I want you guys to allow it to be easy. And I want you guys all to think about the idea that your trades need a name. And it doesn't matter, I don't care what you name it. You can name them Steve, Bob, and Joe. But we do this because all of your trades should be a result of your chart reading. All of your trades should be because you have advantages. All of your trades should be because there was a pattern that you can recognize, that you can repeat, and that has been proven to win more than it loses. And guys, that's the key right there. And that's what we call a statistical advantage. And that's what we focus on a lot in the beginning of class. The first hour of class is very much a lecture. You're allowed to interrupt the lecture, raise your hand, drop a question, whatever you need. And then the second and third part of class, we're going to talk about the trades that you're taking. We're going to look at your charts. We're going to talk about all that stuff going on, and then we're going to work together to hopefully do it a little better. Good morning, Roku. But if you're not chart reading, and I can't stress this enough, guys, if you're not looking at your charts and saying, I have this advantage, that advantage, this advantage, it's time to take a trade. If you're just saying, I hope I go long, I hope I go short, you're doing yourself a disservice, because a tiny little bit of study will get you exactly where you want to be, guys. Because once you're a chart reader, you understand where the market is likely to continue, where it's likely to go, where it's likely to stop, and you take these concepts and then you turn those into trade entry precision. You take advantages, patterns that repeat themselves each and every day, and that's what gets you into a trade. And then once you're in the trade, guys, you have to know why you did what you did. And that's what allows you to manage. So all of you guys that are like, I'm taking momentum trades. I love momentum trades. Momentum trades are my thing. I see them. I love them. They're great. Then you have to understand that when the momentum is gone, so is your trade, if that makes sense. Guys, if you walk into the shower and the shower's pouring on your head and then the water stops, none of you stand in that shower for another 10 minutes, right? All of you say, hey, wait a minute. The shower's over. It's time to get out. Let's dry off. And that's kind of what these momentum trades are that I see you guys flubbing a little bit. If momentum gets you in, a loss of momentum should get you out. And then once you're a chart reader, and man, I can't stress this enough, and I guess I'm focusing on this because I got a lot of emails over the weekend about this. If your momentum trade fails, what's the next possibility? What's coming up next after that one? Which means that you have to manage this one, and there's no reason to hold all the way up to the next trade, if that makes sense. So if your entry is here, guys, you're going to get stopped out every now and then, and that's okay, right? Keep it tight. You're hoping for momentum to carry you through, and if it doesn't, it's okay to exit. But then your next trade might be a trend trade up here. Don't put your stop at your trend trade entry. And we're going to talk about these things a lot today so that you can avoid this mistake, but I'm seeing it over and over and over. So if you identify with that, I want you to pay attention to the high probability trend trade rules today. Good morning, Cindy. And what it's going to do is it's going to allow you to at least have an idea where the market may retrace to. So we're going to understand where the market is likely to continue. This is going to be your entry for the high probability trend trade. If you're not good at the high probability trend trade, I would encourage you to take a few days a week and get better at it, because that's the one that turns you into a chart reader. And you're going to understand where the market is likely to go, which means that with all the advantages, you're going to understand where that market's likely to push to. That's how you create targets, not because you hope it goes to $300, but because your indicators say it's likely to get there. And then you'll understand where the market is likely to stop, guys. And this is the most broken rule out there. Likely to stop areas are very much where trends end. Likely to stop areas create bounces that take you out of moves. Likely to stop areas are this giant red flag for Nexgen users that say, hey, you have all the information in your arsenal to understand that the market may not continue. Let's skip that next trade. Let's not enter that next trade. So we're going to focus on this, guys, and we're going to do it with the high probability trend trade. Because the high probability trend trade, let me go straight to the tutorial section. Straight to the glossary of common terms. Man, my brother pulled it out of there on accident. So the glossary of commonly used terms defines a high probability trend trade as when each indicator on every chart agrees for the rules for the trade. This is when triggers are the strongest. Good morning, Mario, Zorro. Nice to see you guys. The triggers are going to be the strongest, giving you the advantage of momentum, guys. There's no termination conditions, which gives you the advantage of a clear path. And there's no trouble spots between your entry and your target, which makes it easier to collect profits on the trade. Guys, this is the best of the best. This is the one that typically wins 70 to 80% of the time. This is a trade that creates confidence. This is a trade that turns you into a chart reader. This is the trade that gives you the ability to have precise entries and an easier management process. If you're not comfortable with the high probability trend trade yet, if you can't see this thing in your sleep, if you can't recognize it in 2 to 3 seconds on a chart, Give yourself a little bit of time, study it. I promise you, this is a marathon, not a sprint, guys. You've got time to get to the next trades. But the easiest way to get that recognition, post your trades in class and track your performance in the spreadsheet. Every trade you take, post it in the room. Every picture you have that you're not sure what's going on, post it in the room. Every time you see a termination condition and you're working on termination conditions, take a picture, write the recipe, drop it in the room, get feedback on it, guys. The more you post in the room, the more opportunities you have for you and I to have a discussion. And every discussion that we have will revolve around advantages. Every discussion we have will take what you've done and say, hey, I see what you did here. I understand what you were thinking. This is why you did it. Let me show you how you can do it better. Because, guys, that's my job, is to help you do it better. But you have to tell me what you see. You have to tell me your chart read. If you have strong triggers, I want you to tell me, hey, Mark, I have strong triggers. And the reason I do that is because if you tell me that you have strong triggers, but you have weakening triggers, then we need to work on your chart read. If you told me that you had a clear path, but you were directly into a termination condition, then we need to work on your chart read. And even more so, if you jumped in at the top of the move and get stopped out at the perfect entry, then we need to have that discussion. So show me your large chart. Tell me why you're doing what you're doing. Show me your entry chart. Show me where you entered, but guys, more importantly, show me where you exited, because every picture should provide an opportunity to focus on the advantages of the large chart. It should give you an opportunity to look at your entry to see if it could have done better. And it should also give you the opportunity to see what the market did after your entry, because there may be patterns or things that allow you to manage more efficiently. Grant, there is not. Guys, so one of the things that I do is when we talk about termination conditions, and Grant, have you noticed how I've never said if price gets to a thin line versus a thick line, if price gets to a 1-to-1 versus a divergence high, all we ever say is if price reaches an area. So the different thicknesses of lines, Grant, they're from different time frames. And the accumulation of these different time frames on your large chart allows you to recognize trouble by looking in one spot. That's all it is. You'll have the native fibs, you'll have them from your small time frame, and you'll have one from an even higher time frame. And your software puts these together because when you go through the recipe of what it takes to create a termination condition, we don't care if it's from a 21, because that stopped it right there. Or a divergence low, that reversed the market. 1-to-1s created a reverse. Here the native fib creates a reverse. Pretty awesome, right? And then right here, the smaller chart is what it bounced off of. So this picture really helps you understand that termination conditions are lines on charts. And guys, when we get to this rule number 2 lesson, you'll see exactly what I mean. Excuse me. So I want you guys posted in the room. I want you sharing your pictures. I want you talking about what you see, what you read. And this is going to help you define what kind of trades you're taking. So I'm going to drop the annotation picture in there. I want you guys to embrace the recipe. And then next, use your spreadsheet, guys. Your spreadsheet's dropped into the room every day by me. I'm doing it right now. I drop my spreadsheet in there. But the first tab on your spreadsheet is your trade journal. Every time you take a trade, hopefully on Simulator as a brand new user, you're going to have tons of information. You need to go through and you need to do that chart read. You need to annotate that chart. This spreadsheet allows you to talk about whether there were terminations that reversed the market, whether there was momentum, what your 5-1 chart said, what's your profit targets, whether they were reached or not. And if you go through all of this, and then you use the notes section to enter the feedback from class, guys, all you have to do is go back the next day and study it. What worked and what didn't work. And I'm going to tell you right now, if you're hiding losers from me, not posting losers in the room, not posting winners in the room, you're robbing yourself of that private session. You're robbing yourself of that feedback, and you're opening yourself up to make the same mistakes over and over. One of the things that I'm good at is recognizing the challenges that you guys are having and understanding the mentality that goes into those challenges, because I've had them myself. If you go through this every morning, guys, it's going to give you the ability to know what you're looking for during the day, to have areas to focus on during the day, to have ideas that you should be avoiding during the day. And it really establishes those patterns that are bringing you success. That's the first tab of your spreadsheet. The third tab is where you're going to build your trading plan, guys. You're going to, when you have a trade that fits your rules, that's full of advantages, that is testable, that's repeatable, that has been proven to win more than it loses, that's how a look gets into your rules, guys. And you should be filling up this green section with those looks. And then there's sections for management and chart reading and termination conditions. And I've done the exact same thing here, where I've gone through and I've taken about 300 pictures of you guys using momentum and clear paths and using great entries. Go back and study these and ask yourself if you have any questions, and then take a picture of it, drop it in the room. There's the entries for the high probability trend trade going both ways, guys. There is a management plan. There's times when you can hold more. There's a section for NASDAQ. All of this is me doing the same work that you guys need to do if you want to get to where you want to be. It's one thing to have pictures, right? But if you can't go back to that picture and have a clear understanding of what happened, then that picture is useless to you. It really is. So if you take a picture, let's see what this looks like. Awesome short. If you take a picture of an awesome short and you don't know how to repeat it, well, then this picture doesn't do you any good, right? But if you say, wow, that's strong triggers, and this was the potential to break, and there's my perfect entry per the rules, and I can take it all the way down to Fibonacci support, then this becomes a pattern that's repeatable, guys. And if you go back and you find that same pattern 300 times, you're probably going to win 150 of them. And that's what we're doing right now. And then there's the 101 section for you guys that are brand new. We're going to talk about 3 rules. I'm going to come back to the 101 section. I'm not going to give you that yet. We're going to go through and we're going to talk about rules first. We're going to break them down individually. We're going to look at the high probability trend trade. We're going to look at the advantages that the rules produce. And we're going to keep it simple, guys. We're going to use a large chart and a small chart. I found something this weekend. I was doing a lot of study this weekend. How do I make class better? I do this a lot. And I read Josh Kaufman's It Takes 20 Hours to Learn a New Skill. Everybody's heard the deal that, 10,000 hours, right? Guys, that's 10,000 hours to become a world-class athlete. 10,000 hours to become a genius or whatever. No more, Gino. But how long does it take for mastering a new skill? Guys, 20 hours. 20 hours of study. 20 hours of focus study will make you proficient at almost anything. And I'm going to share with you right now, because I'm a little soapboxy this morning. 90% of the people that I encounter every day won't give 20 hours of focus study. They'll give about 4 hours of focus study, and then they'll start trying to do their own thing. They'll start chasing money rather than the process. So, guys, to master a new skill, the first thing you have to do is you have to decide what you want to be able to do. So for you guys, this should be chart reading. This is your first skill. Chart reading and the high probability trend trade. This is step number 1 for new users. And if you skip this step, guys, you're already putting yourself behind the 8 ball. There's your joke, Gino. And then you have to break the skill into smaller parts. Guys, that's the 3 rules. That's the 3 rules. That's what we're about to talk about. We're going to break this skill into smaller parts. And then here's the part that most of us don't do. Practice the most important sub-skills first. Make sure that you can recognize the most important sub-skills first. Guys, make sure that you can take the 3 parts of a high probability trend trade and break them down individually using the large chart. It's going to define direction, momentum, and areas. And then find your entry on the small chart. It's going to refine the broad stroke of the brush that the large chart is. But you've got to be able to recognize 3 rules, guys. 3 rules. 3 simple little things that provide 3 advantages that create the high probability trend trade. And if you fight this, if you refuse to learn it, if you decide that you'd rather be a different kind of trader, that's cool. I don't mind, but you're making it harder on yourself because these three rules each create an advantage. And when you can look at a chart and you can recognize each and every one of these advantages and you can do it instantly, there's a million opportunities in the market for you guys. There are so many different ways to make money with this software, but if you can't read your charts, it's going to prove difficult. And my apologies if I sound a little preachy. So chart reading 101, I'm going to share two things with you guys. The first thing is if you really want to be a chart reader, this is your exercise. I need to see about 250 pictures out of you guys of the rules so that you know what they look like. I created a section. And guys, I did this over the weekend for you. You're welcome. There's at least 10 pictures of strong triggers, weak triggers, clear path terminations, 50-50, and high probability trend trade entries. Guys, this is you cheating on your homework right now. If you don't do this yourself, you're going to pass the homework and you're going to fail the test. And the test is going live. So your job is to take number 11 down to number 36 and number 12 to 37 and number 10 to 35 and fill this spreadsheet with the looks, guys, because once you do that, once you go through and you can identify these three very basic concepts, you're going to be able to find entries. You're going to be able to hold for bigger moves. You're going to be able to find all the things that you need to find to be successful, guys. I don't hold back from you, but I try to talk you into building a foundation first, and your foundation is the high probability trend trade. So we're going to talk about a trade that typically wins 70 to 80% of the time. We're going to talk about a trade that creates confidence through the memory of success. We're going to talk about a trade that should be your foundation as a brand new user. And we're going to break it down into three rules, and each rule creates an advantage. And it's the three advantages that create a high probability trend trade. And the second you lose one of these advantages, you are no longer taking a trade with that high probability of success. You've ventured outside. So rule number one on a large chart says that I must have strong trigger lines, which means that I'm trading with the direction of the trend, guys. If the background is green, I should be looking for rules to be met for high probability trend trades long. And if the background is red, I should be looking for rules to be met for high probability trend trade short. As a brand new user, as somebody learning to read the charts, because the only way that I can have momentum is if all the colors match. So when the background is green, my small triggers, these solid lines, and these large triggers, the dashed lines, these are moving averages. Couldn't tell you how they become what they are, but what I can tell you is that when everything is green and my small triggers break above the large triggers, this is what we call strong trigger lines. Strong trigger lines mean that the odds are favorable for the market to continue up. Strong trigger lines mean odds favorable momentum, and odds favorable momentum is the best time to buy Fibonacci support on a smaller, faster chart. And when everything is down and everything is red, when my small break below the large, the space between the two lets me know that the odds are favorable for the market to continue down, which means that this is the best of the best time to sell Fibonacci resistance on a smaller, faster chart. And I'm going to tell you guys right now, a lot of you are looking for momentum trades. This is momentum. Burn this into your head. This is what it looks like to have momentum. And when those small triggers start working their way back to the large triggers, you don't have the best momentum. And the idea of taking a momentum trade should leave the discussion 100%. Because with both triggers down, when one of the two small triggers is inside of the large, this is the first sign that momentum is slowing. Visually, you can see that the momentum is going away, which means that you're no longer looking for the momentum trade for you guys that are looking for it. Now what you're looking for is a trend trade, because weaker triggers may cause a little deeper push, and you've still got opportunities if everything agrees, but you're going to need to be a chart reader to understand whether or not everything agrees. And then once both triggers are down, the smalls are inside of the large, guys, this is a weakening. This is a slowing of the trend. Anything can happen up or down. And I'm a big fan of language. This is odds favorable. This is when I'm selling Fibonacci resistance with the highest chance of success. This is anything can happen. This is where, honestly, it becomes a crapshoot on whether or not I'm going to be successful in this trade that I'm taking. It may retrace, it may reverse, it may continue down. The reality is I have absolutely no idea. But what I do know, and this takes us into those termination conditions, is that when I have weak triggers and I have an area present, guys, this is where problems happen. This is where the market bounces, reverses. This is where fights happen between buyers and sellers. And all of this happens on the large chart, guys. My large chart is going to define the direction of the market, whether it's going up or down. My large chart is going to let me know whether or not I have momentum. Does everybody see it? Give me a Y, especially my newer users. I know I've got some of you in here that are pretty new. Small triggers above the large triggers, and it's the space between the two. That's odds favorable momentum. That's a market that's likely to continue in the direction of the trend. Guys, odds favorable momentum can continue a market. Odds favorable momentum can break key areas. Odds favorable momentum can even cover some of the mistakes that new users make. Odds favorable momentum, guys, this is where it's at. And it's defined on the first bar on the large chart. But once I have it, I've got to be aware of the areas on the large chart. I've got to make sure that I'm not trading into a termination condition. Termination conditions are those likely to stop areas, those points that may reverse the market. And when I'm not trading directly into one, ladies and gentlemen, I have room to my profit targets, which means that I have a clear path, and rule number 2 is in place. Termination conditions are Fibonacci-based indicators that may reverse the market, and may is a very key word there. The areas, I like to think of them, this is where decisions are made. The people that control the market, the people that move it, that establish momentum, they react at these areas, they enter at these areas, they exit at these areas, and sometimes they fight at these areas. So I'm going to give you a very simple recipe, but we're going to be looking out for blue Fibonacci support, red Fibonacci resistance, grant, whether they're thick or thin. Yellow one-to-ones, a cyan divergence low line and a magenta divergence high line. And guys, these are the areas that may stop the market on the large chart. There's also a condition where 3 divergences in the same area. It happens on every chart. You're going to see that on the small chart first, but the large chart is going to define the areas where the market is likely to stop, and it's going to be that simple comparison between these areas and the trigger lines, the same ones that establish momentum. And you will know without question whether it's an area likely to stop the market, whether it's an area that has the potential to break, or whether it's actually broken, and whether or not the path is clear. So you're going to take the recipe, and it's a pretty simple one. Everything starts with price reaching the line. Price reaches the area. In this case, it's Fibonacci support. When price reaches the area, where are my triggers? If they remain above support, support is likely to stop the market. Support may hold the market. Support may create an untradeable bounce. Support may reverse the market. But the reality is that my advantage of a clear path is gone. And the same is true at resistance. If price reaches resistance and the triggers remain below, well, then this is an area that may stop the market, that may create a reversal, that may create an untradeable bounce that screws up my good time. Is everybody cool with that? It's a pretty simple recipe. Price must reach the area. If price doesn't reach the area, then it's a target. So here the market goes up and the market comes down. It creates this pivot with divergence. Guys, divergence is a loss of momentum. Divergence is a visual indication that momentum is not following price. You see it with a negative number. You see it with a magenta line at a high. This pink line doesn't print until about the 3rd bar down, which means that it is not a termination condition. Price did not reach this pink line. Price actually creates this pink line. But after a little bit of a bounce, when price reaches that divergence high and the triggers remain below, now it's a termination condition. Hey, good morning, Jen. This is like 2 times in the last week you've been late. One more and you're off my Christmas card list. You're fine, guys. Just if you're late, just sneak in. Have fun. Say hello. Price reaches resistance, triggers remain below. Guys, this is a termination condition. Price reaches those yellow 1-to-1s, triggers remain below. This is a termination condition. What does a termination condition mean? It means no more long trades. Is everybody comfortable with that look? And if it can happen at a high, doesn't it make sense that it can happen at a low? Price reaches these yellow 1-to-1s, the triggers remain above. Don't go short. You don't know what's going to happen. Price hits Fibonacci support. The triggers remain above. This is an area that may stop the market. Price creates one of these divergence lows, and when it reaches it, now it's a termination condition because price must reach an area in order for it to be a termination condition. Is everybody cool with that? I'm going to give you the pictures at highs and lows. You should be filling up your spreadsheet with these pictures, making sure that you have a recognition, making sure that you understand the recipe. Price reaches resistance, the triggers don't break. You sit on your hands and thank goodness because it pushes all the way down to support. When it reaches support, all you have to do is ask yourself, where are my triggers? And if they remain above support, guess what? No short trades into support, and thank goodness once again because look at the reaction. Price reaches resistance, the triggers are below, no long trades. Price reached that divergence high, no triggers above, no long trades. Price reaches the second divergence or the second resistance. And the triggers are still down here, guys. No long trades, no matter how much you wish the market would go up. When price trades above a divergence line and back below, we call that a pivot stop out. And pivot stop outs are powerful. It's a powerful termination condition. When it's true at resistance or support, it becomes even more powerful. It adds power to the top, guys. And when this termination with absolutely no triggers through reverses the market, guys, that's what we call a strong top. And a strong top is the precursor for the highest probability trend trade that you can take. A strong top creates odds favorable momentum and a clear path to the downside. And there's that little pullback to resistance, that tail on the large chart, showing you where you could pinpoint where the market is most likely to continue, where you can enter this trade and take this best of the best trade south with all that momentum in the clear path. And guys, these termination conditions are going to happen all day long, every day. You're going to see them at lows, you're going to see them at highs, and it requires a level of patience to not trade into them. So one more run on termination conditions here. The rules for termination say if price reaches and the triggers are below, don't trade. Don't go long. Your rules are broken. The path isn't clear. The area is considered clear when both the small and the large get to the other side of the area. It's not the color of the fib, it's the trigger location. So when the small and the large get above that area of resistance, resistance is now broken. It becomes support. And with odds favorable momentum, we're looking for that potential entry. New users, it's either broken or it's not. And the cool thing is, it's easy to recognize when it's actually been broken because both the small and the large must get through the area. And if they do, the area is broken. Not just the small, but both the small and the large, both triggers of both. Resistance will begin to behave as support. Support will begin to behave as resistance. And then there's 1/3 that once you're a chart reader, once you're good at recognizing termination conditions, once you understand a clear path, you're going to be able to see this look, guys. And this is what we call a 50-50 look. 50% of your triggers have smashed through the area, the small triggers. You have odds favorable momentum, but the large triggers haven't made it yet. This is what it looks like when areas have the potential to break. This is not a guaranteed breaking, guys. This is the absence of a clear path. This is not Rule 2 met, which means if you take a shot at a trade hoping the area breaks, then you shouldn't sacrifice momentum, and you should also be very, very tight on your entry areas. This is what we call a medium probability trade. I'm going to give you guys a plan to take this trade with the highest chance of success. I'm also going to let you new users know that this 50-50 trade is the most lost trade among new users because everybody gets excited about the potential to break. You even see it right here. The area didn't break. It had the potential to break. It had odds favorable momentum, but ultimately it goes up, guys. Your smaller chart will give you indications when that's a possibility. So price comes down, reaches support, absolutely no triggers break. Can you guys give me a why if you're comfortable with that very simple recipe? I want you to keep it that easy. And I really want you, When you start taking pictures of these, I'm going to teach you guys how to study all day long. When you start taking pictures of these, don't just say, that's a term, right? Because that's identifying it. Tell me why. Because, and go all caps, price reached the area, triggers remained above. And if you go through this little drill every time you take a picture, if you actually type out price reached the area, the trigger lines remained above, this is my recipe for a termination condition, therefore, let's write it on there. No more short trades. Guys, I'm teaching you how to get to where you want to be the absolute fastest. And I want you to see this. From this termination, price spikes all the way up to resistance and even a little bit beyond, but the triggers remain below, which means no long trades. My small and large aren't the same color as the background. I don't have momentum. I can't go short. I can't go long. That's still a termination. And then it comes all the way up to the mid-band, and the large triggers are a full bar away, which means that my mid-band is a termination condition as well. And with the triggers all up and the background up, I'm not going short. And guys, this goes on for like 45 minutes. 90% of your day is reading indicators. 10% of your day is saying, look, small and large got above resistance. My path is clear. Look at all that momentum. Thank goodness rule number 3 taught me how to pinpoint that area for entry. Put buying Fibonacci support on a smaller, faster chart when the rules are met, because that gave me the advantage and the opportunity to carry that momentum all the way up to the next key area. And I believe that the technical term there is cha-ching, the sound of a cash register going off, guys. And if you don't give it away when it's not perfect, it's easier to capitalize when it is. So price reaches, no triggers, no trade. Keep it simple. Sometimes the market's going to reverse, guys, even with a clear path, sometimes even with odds favorable momentum. This final termination condition is the only, capital O-N-L-Y, only termination condition on a smaller, faster chart. This is the only instance where I will say rule number 2 is not met. I do not have a clear path because of a small chart. 3 divergences in the same price range. 1, 2, 3 cyan lines from a low, 3 from a high, magenta. That means that we lost momentum 3 times. I know that we lost momentum because the line printed, the negative number is there. And when it happens 3 times in the same area, guys, this may reverse the market. It may, it might, it could. It's not guaranteed to, but now my advantage is gone. It becomes more powerful when your small triggers work their way inside of the large triggers. Anything can happen triggers. The exact same lesson that you need to be able to incorporate on the large chart is the same lesson that's going to let you know when this is more likely to push against you. It's more powerful still when that third pivot is higher than the previous for a low or lower than the previous from a high. It creates a head and shoulders. Guys, this look on a smaller, faster chart is going to help you see the change that you can't see on the large chart. It's going to help you say, no more short trades here with these anything can happen triggers. Even with momentum, I no longer have the advantage of a clear path to the upside. I'm going to choose not to take that trade. And guys, this is termination conditions. 99.9% of them happen on a large chart. Areas on a large chart define trouble. Areas on a large chart are where decisions are made. Areas on a large chart are where the buyers buy, the sellers sell. Rule number 1 establishes momentum on the most current bar. Odds favorable, small's above the larger wide. Rule number 2 lets me know that I haven't reached resistance and I've cleared it back here. My path is clear. The large chart is telling me, Mark, it's time to look for an entry. And the cool thing is now I'm going to go to a smaller chart, a faster chart, a refinement chart. And what happens in 1 bar on the large chart is going to be broken down into 15 to 30 bars on the smaller, faster chart. And it's going to let me use my rule number 3 entry rules. And it's going to allow me to pinpoint where the market is most likely to continue. And rule number 3 is so confident in its ability to do this for you that you're going to use a limit order to buy or sell a pullback in an area inside of favorable large triggers. You're so good at where the market is most likely to continue that when everything says up, when the path is clear, the momentum is its strongest, you're going to buy Fibonacci support as it comes down to that area inside of favorable large triggers on a smaller, faster chart. You're going to define where low is, and that's where you're going to buy. And when everything says down and there's speed and momentum on the large chart and there's nothing in the way, you're going to be able to sell high, and you're literally going to wait for the market to come back to you at an area of resistance inside of favorable large triggers. And you can do this because we take the overall look on the large chart. We take that freight train that's hard to stop, and then we let it, we dissect, we get an x-ray of this one bar on a smaller, faster chart. The bottom of the most current bar should be the beginning of your pullback to areas inside of favorable large triggers. The very top of this bar, this tail or this wick, if your rules are met, is going to be an area right there inside of those favorable large triggers, guys. And favorable large triggers happen when the large triggers and the synthetic triggers on your small chart overlap one on top of the other, piggyback. And the tighter they are on top of one another, the smaller your window of opportunity becomes, the smaller the point where the market is most likely to continue. If you insist on this favorable large trigger look, you're going to have less risk going into your trades. You're going to have a more concise, a more clearly mapped out point where the market is most likely to continue. So I'm going to give you guys this one as well. Another picture for the old spreadsheet. And we're going to do it, and you know what? Let's use the spreadsheet. Let's use a spreadsheet entry. What do you say? I'm going to pull up, we'll do a long trade together. Most current bar lets me know that I have odds favorable momentum. The most current bar lets me know that I haven't reached the fib. And then if I go in my rear view mirror a little bit, you can see that this termination with absolutely no trigger lines through it reversed the market. Guys, that's a strong bottom. Right now, the large chart is the perfect storm for looking for an entry. This is the best of the best, the highest probability. This is the look that if you're a brand new user, you should be insisting on. So we're going to look for an entry, guys, and everything is going up, and the fear of missing out is real. And you're like, oh, they're going without me and I'm never going to get paid. And oh my gosh. But guys, I need you to wait for a pullback. I need you to wait for the small crowd to do their thing. And you know what? I omitted that little bit of it. So let's do this real quick. Large crowd, small crowd. Large chart, small chart. Large crowd creates momentum. Large crowd reacts to areas. Large crowd creates the direction of the market. Guys, the large crowd is Niagara Falls, right? And there's just no reason to try to go over the falls. There's no reason to swim against it. And when these guys say up and fast and nothing in the way, it's more likely 70 to 80% of the time to do what they want. But there's always a small group of people. There's always this little group that likes to fight, guys. It's a truth in the market. And these little fighters give us our perfect entry, because they create the pushback to the areas. And it begins with a reversal bar. And at the time of the reversal bar, we're signaling the start of a pullback. I don't enter on the reversal bar because this is just the beginning of the pullback. I'm anticipating it pulling back further. So the first thing I do is I look for my triggers. And my correction point happens at the triggers. These are moving averages, and price tends to correct to the average. So the tighter they are on top of each other, the smaller the correction point. Does that make sense to everybody? All we're doing is saying price may come somewhere from the bottom of the triggers to the top of the triggers. It's a correction point, but there's nothing for the market to bounce off of. So what I do is I identify, the areas inside, and I keep doing the wrong picture. Areas for a high probability trend trade, ladies and gentlemen, are going to be Fibonacci support, a blue fib, a green midband, or yellow one-to-ones. Fibs, midbands, yellow one-to-ones. These are the areas inside of favorable large triggers where I anticipate the market bouncing. This creates the window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. My job as a rules-based trader is to activate a limit order right at the top of the window, at the highest point of support, because my large chart has the best momentum ever. My large chart has absolutely nothing to bounce off of. My large chart says, Mark, we want to go up and we're going up strong. And if the small crowd fights, I don't expect them to be able to push that hard against all this. And guys, this becomes your entry for the highest probability trend trade. This is the trade that if you focus on the entries for your first week or two with me, if you give yourself the ability to recognize where the market is most likely to continue, you are going to reduce risk dramatically. You are going to create a level of patience that has you waiting for advantages. You're going to understand momentum. Guys, look at this. That's momentum on a small chart. You're going to understand that trigger lines are a correction point, not an area for a bounce. And you're going to understand that the areas inside of triggers give you the highest chance of success. And your job for 20 days with me, guys, is to be able to create this box, this window of opportunity. Whether it's a long trade or a short trade, the rules are the same. It begins with a pullback. Find your triggers. There's your red box. Find your lines inside of the triggers. One line, one area where the market is most likely to continue. And guys, this becomes your high probability trend trade entry. You can go back and study it 10 days historically, as many markets as you want to. Go back and find your high probability, find your odds favorable momentum. Find your clear path. And if you see a tail, historically, circle it. And if that tail lines up with support inside of favorable large triggers, this is your best of the best. This is the picture that you need to take, drop in the room. And guys, this is it. This is your foundation, because once you can find this trade, you understand momentum. And once you can find this trade, you have a grasp on termination conditions. And once you can find this trade, this entry, you begin to understand that the market bounces off these key Fibonacci areas, that it bounces off of these triggers. And what it does is it gives you this heightened sense of what the market is telling you. And then once you know where the market is likely to continue, well, that also means that you know where the market shouldn't go. And that's where your protective stop is going to go. And one of the biggest signs that you're maturing as a trader is that you manage your risk before you ever manage risk. And that's one of the great things that this software does for you. This is one of the great things that this methodology does for you, is when you understand where the market shouldn't go, you know where, or should go, should continue, you understand where it shouldn't go. And that's your first stop placement. But you've already managed your trade. You've already reduced your risk, because what you've done is you have absolutely positively insisted on odds favorable momentum. And this lessens the likelihood of the market going against you. And you've made sure that you're not trading into a clear path. And this increases the chances of continuing with the momentum. And you have pinpointed your entry area. And what this has done, guys, is you have reduced your risk dramatically by taking this entry. And then your protective stop goes 4 or 5 ticks outside of the window of opportunity, and you are going to take losses. It's a normal part of a positive equity curve, ladies and gentlemen. Anything that wins 70 to 80% of the time, mathematically obligated to lose 20 to 30% of the time. It's just a part of it. It's the cost of doing business. So if it hits your stop, you're out, but it's a smaller loss. It makes it easier to capitalize on the correct trades. And then if it goes in the direction of your trade, you can reduce risk even further, a tick or two above a reversal bar, below a reversal bar. And by incorporating this as the brand new user, it means that even on trades that don't work, it's not unlikely to see Nexgen users only losing $30, $40 on the trade, taking minimal losses instead of these giant $200 to $300 I sure hope it goes losses. And when you know where the market is likely to continue, you know where your stop should go. You would never take a trade here and put a stop above support inside of favorable large triggers if the rules are met, because that's exactly at a continuation point. And you'll begin to process this every day, and you'll be able to process it in a moment's notice. And you'll be able to look at your charts, and you'll be able to say, hey, look, that was odds favorable momentum, and it's coming off the termination. And now I'm at the tail end of momentum, and I can see it right there. But if I scroll back, did we get a high probability trend trade? Let's see what happens with all this momentum if I circle that tail. And this was a while ago, but let's see it. That market pulled directly back to support inside of favorable large triggers. He got you, Cav? This is how you're going to begin to study, guys. This is a medium probability trade because the large triggers aren't through yet. But you'll notice that those weekend triggers, even not in an area, end up reversing the market. So you can go back and start studying. I don't have the best momentum. I don't even have areas inside of favorable large triggers. If this market goes down, it's got to go down without me. I'm directly into resistance. All of my triggers are below. I'm not taking this trade. I had weak triggers and no areas inside of favorable large triggers. I'm giving up two of my advantages. Does that make sense, guys? And then here with the potential to break, let's see what the tail looked like. Right to resistance, right at those trigger lines. Kind of cool, isn't it? Over and over, ladies and gentlemen, this happens. This isn't something that's every second of every day, but it is something that the more you study it, the more you realize that if you're just patient and you give yourself the highest chance of success, well, then you're more likely reaching your goals. You're more likely to be able to pinpoint right where the market is likely to continue, which means that you're more likely to make money. And that's all we're looking to do, guys, is we're just looking to make money. Are there any questions about the high probability trend trade? Any questions about momentum? Any questions about a clear path? Any questions about an area inside of favorable large triggers? Guys, my job is to give you the information. Your job is to tell me if you're not sure, if you don't understand something, so I can clarify. I'm going to give you guys a plan right now. I'm gonna throw this out there. If you're brand new, if you are brand new, guys, let this be your plan for 30 days. This is a stepping stone in your learning journey, and this is designed to optimize your chances of success with a high probability trend trade or a 50-50 trade. Guys, this is designed to give you the highest chance of success, to create the most confidence. This is a plan that I've had people get funded on those accounts following it to the letter. This is a plan I've watched people make real money in their first 30 days with Nexgen by following this plan to the letter. The biggest challenge for new users is you want everything. You want every trade. You want all the money. I had 3 or 4 different messages this weekend. Mark, how do I get into this trade that doesn't fit my rules? How do I take advantage of this move that doesn't fit my rules? The reality is you've got to be willing to miss a few. You have to understand that all the money isn't your money. If you walk into a bank and you say, give me all the money, you're a bank robber. They're going to tase you and hogtie you and send you off to federal prison. But if you walk into the bank and you say, hey, may I have my money, please? May I have my high probability trend trade money? May I have my perfect 50-50 trend trade money? Guys, you're more often than not going to walk out with that money. So keep it focused, guys. Give yourself the best chance of success. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Make the high probability trend trade second nature before you look for different trades, says Ron. The high probability trend trade will teach you how to look and how to know what you're seeing when you're seeing it. Amen, hallelujah, and all that stuff. Guys, I promise you, if you get so stinking good at the high probability trend trade, it's difficult to not find other trades. But you've got to be great at it. And it begins with not fighting the large chart. So many new users want to be first. I want to be in the market right when it reverses. I want to be the first one in and the last one out. And guys, I'm telling you, we don't have to. We're better than that. The idea that we're not in control, the idea that this guy's in control, the big old shark with all the money, creating momentum, creating a clear path. I want to be a remora, guys. The tragedy of day trading, and that maybe it's the capitalist mentality that we all have, and we all have it, is that nobody believes that $300 is a lot of money as a day trader. But if you found $300 on the street, you'd be excited, right? Guys, $300 a day as a day trader, is a $72,000 year. Let that sink in for a second. Most of you can make $300 in one trade. Turn that into 600, right? And you're in the six-figure range. Guys, $500 a day, $250 per contract on a 2-lot is $250,000 a year. It doesn't take all the trades to be successful. It takes the best trade. It takes not giving it back on the wrong trades. And gosh, write that down on a piece of paper. Don't give it back on the wrong trades. It's okay to lose when you have a termination that reverses the market with strong triggers, no terminations in an area inside. Guys, you're going to lose 2 out of every 10, 3 out of every 10. Don't forfeit advantages and expect the same results. That's not fair, right? That's not fair to you to create expectations when you're not following the rules. So you've got to know what you're looking for. Don't fight the large chart. Define your entry. And once you can get into the market at the right spot, guys, management becomes easy. Great entries create manageable trades. But the same way you're learning to create a plan based on your chart reading, management requires even more chart reading. And I'm going to say this really loud. Not really. I'm going to say it in my normal voice. But I want you to hear this very loud. Every trade you take, every different trade has a different approach to management. If you don't know what kind of trade you're taking, if you can't identify the advantages that got you in and have a management plan for that particular entry, you're going to struggle a little bit. If you are taking a momentum trade, you have to manage it like a momentum trade. If you're taking a high probability trend trade, you can manage it like a high probability trend trade. If you're taking a medium probability 50-50 trade, you have to manage it like a medium probability 50-50 trade. So guys, I try to encourage you a lot in the beginning. Keep it simple. Keep your trade count low. Look for 2 things off the KISS plan initially. Look for the high probability trend trade. Look for the 50-50 trade with the highest chance of success. Because it's all based on entries. Your management plan is based on entries. And your management plan for the high probability trend trade from the KISS plan is 100% dependent on your ability to get into the market where the market is most likely to continue. And it's also 100% dependent on you understanding the window of opportunity. And it is 100% dependent on you being willing to put your stop where the market shouldn't go, outside of the window of opportunity. Things that I see from new users. But Mark, my small triggers turned against me. Guys, momentum is defined on the large chart. Your small chart is an entry chart. I also see new users put their stops right inside of the window of opportunity. And this is like guaranteeing that the market will hit your stop and continue down. And I see it all the time. Or I don't want to risk that much. I'll just put my stop here. Hopefully the mid-band holds it. Once again, the market says, oh man, look at that. The sharks go up and they say, delicious. Stop you out, and then the market goes down. And I see it all the time. So your first management plan is doing a couple things. The first thing is it's putting stops where the market shouldn't go. The second thing is it's making you okay with the idea that it's all right to lose. And I'm going to say that again. It's okay to lose. It's all right to lose. Guys, it's a cost of doing business. But this should be your goal. If you lose this trade, it should be because you had odds favorable momentum, a clear path, and the correct entry. Not because you had weak triggers and stuff in the way and you hoped it went down. And with all the advantages, if you're not stopped out, it's more likely to give you a reversal bar. And you're going to move your stop 2 ticks above it. And you're going to say, I'm not going to move that stop. I'm going to leave it right there. I'm going to let this go out. I'm becoming a chart reader. And it's either going to stop you out for a smaller loss or it's going to hit your first target, which is only $100 away. And $100, guys, if that's the best you can do every day, that's a $24,000 a year off $100. $100, creating the ability to trust that it was momentum, creating the ability to trust that it was a clear path that got you in, creating the ability to trust that you know exactly where the market is likely to continue. And my brother just gave me this picture, and he goes, you can post that one in the room, because he loves to text me mid-class. When everything says up, when the momentum is this strong, split triggers, he waits for the pullback to the area inside. And because it's the NASDAQ, he gets in on the better side of things, guys, and he's able to capitalize all the way up. This is not high probability trend trade. This is medium probability trend trade. This one requires a little bit of chart reading, but that's where you're headed. Once you begin to recognize the advantage of momentum, you understand that it carries you to that next level. And you can get paid quickly, and you can reduce your risk to zero, and you can take that trade to the next target. And guys, if this is all you focus on for your first 30 days with me, I've never had anybody in the history of this checklist do worse than 70%. I've never had anybody follow these rules to the letter and do worse than 70%. I've had people test it, do their automated stuff, and end up like 83, 84% over 400, 500 trades. Your goal should be to make money. This is the easiest way to do it as a new user. And then once you're a chart reader, and this is important, ladies and gentlemen, once you're a chart reader, you can go to that 50-50 trade. You can go to that trade where 50% of your triggers are through the area, but 50% are not. Whoa, that's really small. Which means that it's no longer a high probability trend trade, which means now you're trading hoping that an area breaks. Your chart reading will identify that the area hasn't broken. Whoops, where's my little slide chart? Guys, I take a lot of pictures. Holy smokes, I do take a lot of pictures. I'll tell you what, we'll just make one real quick. A medium probability trade is defined as when most indicators line up for a trade. However, a small issue exists. Why am I telling you this? Because once you can identify advantages, once you can say to yourself, I have momentum, a clear path, and an entry area, you can begin to look for entries. But if you say to yourself, I have momentum, but not a clear path, well, then it lets you know the two elements that you need to focus on, that you need to insist on. If I don't have a clear path, I need to be sure that momentum is the absolute best. And I need to make sure that I can have the lowest potential risk on my entries. And guys, this 50-50 plan is going to allow you to do that. So 50-50, one area not broken, highlighted. The more areas that aren't broken, guys, the more difficult the trade becomes. And you know what I'm going to do? I'm going to take this one right here. We're going to rearrange this on the KISS plan, and we're going to paste it from a good top or bottom. From a good top or bottom, from a termination that creates a reversal, guys. And if this is a no, stop looking. The likelihood of success goes down dramatically. Odds favorable momentum on the 13-2. It can't be a 50-50 without odds favorable momentum, because the only way we expect areas to break is with momentum. If it's a yes, move on. I have to have smalls outside of the large on the 5-1. I need to have momentum on the 5-1 as well. Are you guys with me so far? What we're doing is we're giving ourselves the best chance to break this area. And then it tells me no divergence on the 5-1 in bright red. The most common reason for a loss for new users on a 50-50 is trading into divergence. And then you're just going to use your entry at the area. But it reminds you, if there's divergence, don't trade. Guys, you should have this on your desktop. You should look at it every day. And then when you get into management, it's not a high probability trend trade. So the management will be different. You have to know what you're getting into to know how to manage. You're still going to do where the market shouldn't go. You're still going to do a tick or two below the reversal bar. And it reminds you for the third time in bright red, if divergence prints exit the trade. Guys, is there anyone in this room with any misconceptions about what divergence does to a 50-50 trade? I hope not. 90% of you are going to show me a 50-50 with divergence that you just lost today. $100 first target or the first trouble spot, which means that it might be a $50 target, and that's okay if you're willing to take it. 200 on the second, guys. Medium probability trades are rarely home run trades. Get in, get paid, get out, wait for the next best trade. So I'm going to give you guys the KISS plan. You may choose to follow it. You may choose to not. I'm going to tell you right now, I have had a lot of people find a lot of success with the KISS plan. I've had a lot of people stray from the KISS plan, watch their success go away, and then return to the KISS plan and reestablish that success. Just saying. I've had people trying to find every trade and can't find any of them, or try to find 2 trades and find all of them and find success. So if you're not where you want to be and you've been with me for a while, I want you to explore the option that it's okay to only take 2 trades for a while, to get your feet back under you, to get your chart reading back where it needs to be, and then expand again. But your goal should be to speak to yourself in terms of advantages every time you look at the chart, guys. Do I have momentum? Do I have a clear path? Do I have an area inside of favorable large triggers? And if this becomes your language, well, then it's difficult to trade, because if you're asking yourself every time, do I have momentum? Well, I don't. Oh, shit. This may not be the best trade. Well, at least I have a clear, I don't have a clear path. And at this point, you have to ask yourself, why the hell am I looking for an entry area if I'm giving up 66% of my advantages? I'm also going to give you guys a high probability trend trade checklist, guys. Put this on your desktop. Police yourself. Write these rules on the chart every time you see it. Make sure that you're giving yourself the highest chance of success. And if you're just learning it, guess what? This is a termination that creates a full reversal, guys. This is a strong top or bottom. This is odds favorable. Let's make it bigger for you guys. Some of us have eyes like me. This is odds favorable. This is odds favorable. This is anything can happen. So momentum traders, if you're taking momentum trades with this look, you're not taking a momentum trade. If you're taking momentum trades with this look, you're not taking a momentum trade. This is momentum. This is the one that breaks areas. This is the one that creates a market likely to continue. You've got to be able to recognize it. Termination, potential to break, broken. Not a high probability, low probability. Medium probability, not high probability. High probability. Easiest to manage. Takes a lot of chart reading to manage. Shouldn't even take it so you don't have to manage it. And then, guys, there's your windows of opportunity as well. So all of this is laid out for you. And it really does make your life easy if you learn these 3 looks first. I went through this weekend and I said to myself, you know what? The average human absolutely hates to get work done. They hate to participate in their own success. So every day I tell you guys, fill out this 101 section, guys. Go through 25 pictures of strong triggers, 25 pictures of weak triggers. After 50 pictures of the 2, you're going to understand the difference. 25 pictures of a clear path, 25 pictures of a termination condition. Again, after 50 pictures, you're going to understand the difference between a termination and a clear path. And then you're going to add the 50-50 because you want to make sure that you understand when areas have the potential to break, because that's on your KISS plan. And if you can't distinguish between the 3, well, then you're not ready. And that's okay. Go back and study. And then entries, guys. But the task isn't to just take the pictures. Annotate the charts with the whys. Why are the triggers strong? Let's go to a strong triggers put. Why are the triggers strong? The triggers are strong because the small triggers are below the large triggers. There's space between. And then I took the time to annotate. This is strong triggers. This is odds favorable. This is momentum. I'm reminding myself over and over why this is an advantage. And then what are weak triggers? Weak triggers, smalls inside, loss of momentum. Anything can happen. And there it is visually. I can tell the difference between the 2. Guys, I went through and I did 10 of each, maybe 11 or 12 on some. This whole drill took me about 35, 40 minutes on a Sunday morning, couple cups of coffee. It's on the spreadsheet that I gave you. Go through and do it, but don't just take the pictures. Talk about the whys. Why is it a termination condition? What's the formula? Price reaches, triggers, what's the disadvantage? And then do this for every picture, guys. Take the time to type it out every picture. Don't copy paste. Type it out, because every time you type, your brain has to wrap itself around the concept. And when you type it out 25 times, you're going to have that concept down. And what you're going to do is you're going to piece these simple ideas together to create a trade. You're going to take strong triggers and you're going to couple it with a clear path, and then you're going to be able to find your entry based on that look. And that's the goal. That should be your goal every day. So chart reading 101. If you need feedback on whether or not you took the pictures correctly, drop it in the room. If you have questions about the advantages, drop it in the room. If you're not sure whether it was momentum or not, go back and study, right? Termination. There's your gap theory as well, full bar away. Not going long into resistance, thank goodness, it would have run you right over. I'm not going short without momentum, thank goodness. How many do you have, Matt? The only thing that I ask, I'm going to tell you. Cool. So you're about 27 short of where I start getting mad at you. But here's the deal, Matt. If you're going to post a picture, and I saw that you posted one, so let's make sure that you're giving me the best chance to help you. Where'd your picture go? I saw one in there. Guys, I want to see all of your pictures. I want to see every question that you have. I want to see everything that you're looking at. Okay. So, and that's the thing, Matt. That's all that I ask. And I don't think it's too much to ask, is tell me what your read was. Tell me what you were seeing. Because the whole goal, ladies and gentlemen, don't just show me a picture with a winner and go, hey, Mark, look how kick-ass I can be, right? Yeah, give them all to me, Matt. We'll look at every one of them. And the only thing that I ask is if we're going to do it, don't make me guess on your reads. Tell me what you saw. We'll celebrate every victory. We'll try to correct any problems, and we'll get you to where you need to be. And then the second half is just to make sure that make sure that you show me both charts. Because if it's a trade and you don't see both charts, I don't have enough information to discern whether or not it's right. So, Matt, when I click on your first one, good top, looking for a bounce off this, you didn't get it. So, Matt, this is what I want you to do. And you may dig this, and you may not. And that's okay. I don't want you to change any of your charts, okay? But I want to do this. You're looking for a long trade, right? Correct me if I'm wrong. So here's the lessons that we have in yours. A good top is a no triggers through termination that reverses the market. Why is that important? It's important, Matt, because when you get a no triggers through termination that reverses the market, decisions were made at a key area. Decisions were made here that not only stopped the market cold, but also reversed it. Does that make sense? And then, Matt, the second thing is this could never be a good top up here because it didn't reverse the market. So there's the first lesson, is that we don't have a good top. I don't know what SOH is. Guys, I rarely understand your acronyms. Okay, sit on hands. Cool. So when we go through, you say you're looking for a bounce. And you said you were looking for a bounce here. So you're saying, Matt, you were looking for a 50-50 trade. So tell me if I'm right here. Was looking for a 50-50 trade that didn't set up. And when it hit resistance, I took the trade off the table. Does that sound about right? Perfect. So Matt, what I would annotate on this chart, like if you're going to come back and study it tomorrow, I would say on this chart, when it hit the term, I canceled my order. And remind yourself, because the read up to it is beautiful. The read up to it. So don't worry, that's not a good top, but what I would put is this is an amazing bottom. Right? That's 1980s Jordache jeans. That's an amazing bottom. And that's odds favorable momentum. Write it on there, brother. Like, give yourself, this is my read. This is why I was looking for the 50-50, because this kick-ass bottom and this great momentum, and then those rat bastages went to resistance without me. And that's where, and now I know your acronym. I'm going to sit on my hands. I'm not going to take this trade into the termination. And Matt, this is perfect. Your read was perfect. Your expectations were perfect. Your area inside of favorable large sugars were perfect. They just didn't give it to you. And that's where you begin to develop this little sit on your hands thing. And you just go, dude, it's just not my money. But there's going to be a time where it is my money, right? There's going to be a time where this is my trade. Great job, Matt. And when I come through and I re-annotate and I talk about things, it doesn't mean that you guys did anything wrong. That's what I really want you guys to know. It doesn't mean that you did anything wrong, but my goal for you each and every day is that if I teach you how to annotate your charts, to cement this stuff into your brain, it gets there quicker, it sticks longer, and you find it easier. So Matt, great job on that. And we're going to go through and we're going to do this for the second hour, ladies and gentlemen. We are going to look at everybody's charts. We're going to talk about the advantages. We are going to look at entries. We're going to look at exits. And all we're going to do is we're going to see if we're reading charts the way we need to read charts. We're going to see if we're identifying advantages. Termination, it's ugly everywhere, but some of you might have taken that long. I'm not going to knock you down if you didn't take a high probability trend trade, guys. I'm not going to beat you up if you broke my rules, because it's got to be your rules. But things that you have to know going into a trade to be successful. What are your rules for entry? And then what are your management rules after I enter, guys? And it depends on the type of trade. So we're going to talk about all these things on management. I'm going to look at your entries. I'm going to look at your exits. And we're going to see what we can do to develop consistency across the board. So I'm going to take a break. I'm going to go walk around for a second, high five my wife. And then when I come back, guys, we're going to talk about all the things going on your charts. We're going to talk about advantages, disadvantages, whether it's high probability or medium probability. We're going to probably take pictures for the spreadsheet. But while my chart's loading back up, I'm going to leave you with this big picture that is completely boring that says I'll be back in a minute. So good time for you guys to take a break too. I'll be back in just a minute. Love you too. Okay. All right, y'all, let's get back to it. So I'm going to scroll up to the very top of the room and we're going to start looking at the charts that you guys posted. And we're going to look at your chart reads and we're going to talk about what you're looking for. And you know what, Andy, I've got 4 in a row from you, so I'm going to open up all 4 of them. And we're going to start here. Counter trend trade after strong reversals on 2 charts. Using 5-1, 13-2, and 5-1 using HVA lines. All right, Andy. I love this. Oh yeah, Josh. Yes, sir. I try to get every day. All right, Andy, are you in here? All right, so let's just talk about, and I know that you're playing on sim, right? And you're saying to yourself, I want to catch those trades that I see other people trading. I want to catch those little momentum looking trades. So I want you to see a couple different things, Andy. The first thing is that you're trading directly into fibs with every trigger below. Every trigger below. So the basic rules of termination conditions say this is an area that may stop the market. Does that make sense? Okay, that's a big one. This is not a no triggers through termination condition. That's not strong. This is just a pivot stop out, which means that my first place for continuation down in this market that's been trending down is right where you entered, to the long side. Does that make sense? So I don't have odds favorable momentum. I don't have a clear path. You're really just hoping that this area breaks at this point. And Andy, they're going to let you get away with this just enough to make you believe it's the right trade, if that makes sense. You don't have the advantages in place. If you had taken, and let me do this too, because I don't want to just do it. Let's say, Andy, hypothetically, these fibs aren't here. All day long, you have room to manage. You have room to do all this stuff. But all you did is traded directly into a fib. Does that make sense? You didn't give yourself any wiggle room. There's nothing to put a stop behind. There's nothing to manage. And I think what you'll find is that this one is less likely to win, which means if it's less likely to win, it might be worth sitting on the sidelines and saying to yourself, well, if it breaks, I'll go to the next area, right? If I end up with a clear path, let me wait and see. Let me see if this rolls. Let me see if this breaks. And then this one, again, why are you so hell-bent on going counter trend trade? I've got odds favorable momentum. Everything is down. How is this a strong bottom reversal? Can you give me a definition for a strong bottom reversal? Because I'm a huge fan, guys. Let the large chart lead the way. Andy, is that your best look for a long trade? Not to the area, odds favorable, everything going down. This is my brother used to pull this trick on me. Is that my best look for a long trade? The answer is no. Not even close, right? So I've got odds favorable. I haven't hit the fibs. Andy, I want you to see what happens when you start going outside of your happy zone, trying to catch everything. And tell me if I'm wrong on this one. And guys, this is common. I've done this. This is why I've done it. Right here, you're thinking, I can't wait to go long. I hope I get a shot to go long. Man, I hope it gives me the long. I think there's going to be a long. Everything's down, and your brain is already trying to go long. So much so that you missed the perfect trend trade. That's your first target where you went long, right? Divergence hasn't printed. You don't have any losses of momentum. Everything says down. You're hoping that these yellow dots beat all of that momentum. Does that make sense, Andy? Yep. And that's a true story. And what Cab's talking about is back in the 90s, there was a guy. Let's say that this move from here to here represents $12 million. There was a guy that goes, man, I'm going to go long into resistance, and it didn't work. Well, let me add on because I really want it to go long. I think it should go long. I hope it goes long. It might go long. Why isn't it going long? Oh my God, it's not long. Damn it, there's $12 million gone. True story. When the reality is from here to here is the easiest trade that you'll ever take. Does that make sense, Andy? And I know that you're seeing other things in the class and you're like, man, I want to catch that trade. But you're trading half-truths. Your large triggers didn't roll over here, right? There's nothing over here that says that it's time to go. Counter trend above the green HVA. You're not above the green HVA. You're below the green HVA. And that's it. You're fishing with 35 poles and no bait. So Andy, it's okay to think longs, but you have to think longs if I hit the area. If something slows down, right? And rule number one, maybe not rule number one, but the easiest way to absolutely ruin your day, ladies and gentlemen, is to trade against strong triggers. And then trading in determination conditions. Those are the top two reasons traders lose money using the software, because they begin to form opinions rather than trading the rules. So what I want to encourage you guys to do is always trade your rules. And Andy, what are your rules? That's why annotation is so key. What makes this a strong bottom? And I'm not knocking you around a little bit, but you wrote strong bottom twice, and I can't find one. So I'm curious what your definition of a strong bottom is. And I say that because what happens is once you can define a strong top or bottom, then you can be consistent. The fibs that rolled up at the triggers. So the large chart didn't reach an area, right? Do you see it? It came close. So let me give you my definition, and you can choose to use it or not. My definition of a strong top or bottom is only a large chart scenario, not a small chart, because a small chart's a refinement chart. My definition of a strong top or bottom is a no triggers through termination. That's the first part. That has to happen. If it doesn't happen, I can't have a strong top or bottom. And then the second one is that it must create a reversal. And what that means for me, Andy, and again, you can create your own definition. I just need to be consistent with it when I read your charts with you. For me, a decision was made at a key Fibonacci resistance and the market couldn't go up any further. From that no triggers through termination condition, I got a reversal in the market. My large triggers went from green to red, and it's this point right here where I'm willing to label it a strong top. No triggers through termination, it's right here, not until 7 bars later, that it fits the criteria for a strong bottom. Strong top, once it reverses, strong bottom. And I do this for a reason. I do this because what happens a lot is I could have gone short, I could have gone, or could have gone long, 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 right? And all of these are key Fibonacci areas, and all of these may have had fluctuations on a smaller, faster chart that made me believe the market was reversing. But the large chart never, large triggers never did anything but down all the way to right here. So what it does for me is it doesn't get me anticipating the move. It says to me, let it prove that it's a good bottom. Let things roll. Let things come together to let me know that my advantage is present. And here it's just not there yet. And counter trend trading, man, another good story. There was the 12 million story, but my brother had a broker call him once. And my brother's worked with a lot of brokers over the years, made a lot of friends in Chicago. And the broker goes, man, John, I finally figured it out, brother. He goes, I know how to end up with $1 million in your trading account. And of course, my brother's like, all right, Billy Bob, tell me, how do I get to $1 million? And he goes, all you got to do is a simple trick. I finally got it. I mastered it. He goes, fund your account with $3 million and fight momentum, fight the trend. He goes, you're pretty much guaranteed to end up at $1 million. So, Andy, if this is your trade, awesome. But you've got to talk about divergence from one-to-ones. You've got to talk about smalls rolling, not large, because you entered before the large rolled. You enter from the wrong side of the synthetics, right? You're entering from the wrong side of the smalls. So at least find a picture that you can repeat over and over and show me that same look 50 times and show me that it wins more than it loses, and I'll get on board all day long. And now here we have odds favorable and we have a clear path. And it's funny because this is the one that you don't trust. Isn't that odd that you were willing to hold in determination conditions, that you were willing to hold fighting the large chart, and then the second you traded against it or traded with everything, you panicked and exit the trade. And that's a little human nature there. Once it fit the rules, that's the one that you didn't hold. And then 50-50 from a bad bottom with divergence. I told you guys someone's going to show me a loser on this look, and there it is. And so, Andy, let me tell you what I see on this one, or on the accumulation, is you're defining your areas on the small chart. Is that fair? It's coming from divergence and one-to-ones on the 5-1. Who cares? The large chart has to lead the way, brother. And this is a bad bottom, not a termination that reverses the market. And this is a 50-50. The large triggers didn't break. And this is divergence on a 50-50. And even though your entry is perfect, this is a low probability trade. And I love your management on it. But there's a lot of things wrong with it. So make sure that you have rules for trades. Make sure that you have identifiable patterns. And make sure that you're getting the best information from the right chart. Make sure that you're allowing that large chart to lead the way. Make sure that you're letting the large chart, where is my picture, define the direction, the momentum, and the areas, and remind yourself that the small chart is nothing more than an entry chart. It's a refinement chart to give you the best entry because the large chart said. Great work in there, Andy. Great job putting all this together and talking about it. I love it. Roku, there's a termination that creates a reversal that gives odds favorable, and you said, I'm not willing to jump in with the nonsense here from a bad top. Let me let it break above the trouble, and I'll ride that wave of momentum. And Roku, that's solid. Great trade. And then Joel, are you in here? And guys, this is another example of not understanding the rules. 5-1 trading, man, we've all done it. This is another example of not trading the rules. And man, Andy, you're going to be a rock star because there's a lot of great lessons in there. White bar, white bar. I heard John Novak say white bar. That's got to be a trade. Well, white bar trade comes from a termination condition. The large chart didn't have one. So understanding the rules for your trade. White bar HVA line, what does that mean? White bar, there's no white bar here. That's large triggers down, small triggers up from the middle of nowhere. There's no white bar here. That's into a mid band with only 2 divergences from a bad bottom. Everything's been going down, right? So guys, this is a tough one. This is a tough one when you start trading half-truths. White bar is not the rule for a trade, guys. A termination condition that creates a reversal in the fast triggers that gives you a pullback is a white bar trade. So make sure you understand what you're looking for, ladies and gentlemen. I promise it'll make your life so much easier. And then Grant, everything says down, took a short after a pullback to the synthetics, got in on the second red bar, waited for the large triggers to break support. The triggers still had some momentum, but signs of slowing, had a path to the next support with a roughly 20 ticks. First 120 in profit, put second take profit just above the support, got out at the green bar. Beautiful. Grant, can we talk about this one? I'm going to try and simplify what Grant wrote. And Grant, tell me if I'm wrong. Watch this. That's pretty much it, right? Odds favorable, momentum, clear path. Wanted a pullback. But when it headed in the direction of all that momentum, I got in and hoped it made the next area. A loss of momentum will take me out. Sound about right? Odds favorable, momentum, and a clear path. Large chart leads the way. Grant says, I'm looking for a bigger pullback, but since it didn't happen, since it gave me this down bar, I'll ride that momentum to support. And since the triggers are weak, I won't hope. Yeah, and Andy, man, I'm telling you right now, there's for every one of you that's willing to post in the room and get the feedback, there's 10 people that don't. And man, Andy, this is how trading plans are made. You drop them in the room and we talk about them. And we talk about advantages and we talk about what could go wrong in that scenario and what is so right about the scenario. And eventually, all those lessons formulate into a plan. And Andy, that counter trend trade may be the best trade for you ever. And it may end up being your favorite trade ever. But I can tell you that, where is it? Let me see if I can find the picture. It's things like the divergences, right? It's these little safeguards on the smaller chart that give you a better chance on the larger chart. Ron has a trade where he does exactly what you were doing. And let me find your picture and I'll show you exactly where Ron's trade would have been on your picture. Is Ron would say that after divergence prints down here from the bottom, then I'll look to close the gap up to the problems up top, right, to that reversal bar marker. Instead of trading into the area, he'll find a pattern that allows him to trade to the area. And I think that's where the refinement process comes in, is you have to trade into areas a couple times and literally get your butt kicked before you start trusting that it's not the best idea. And here's a great example, right? Everything is up, But because of the divergence, because of the weaker triggers, there's this expectation that it's going to drop down lower, probably to the reversal bar marker. And Ron knows that with this look, it's a potential long trade. So he's managing aggressively and out at the spots. And guys, it takes a while to get that comfortable with your charts. It takes a while to get to have that much bravado to fight momentum against you, because you're seeing a pattern that you've recognized, not because you're hoping that it goes down and retraces. And I think that's the difference. And it's riding the pullback. So let's see what we have. Jen, divergence, all the momentum. And you're going to sell at the pullback right to the small triggers. So Jen, not a strong top, because all the triggers got through, right? Not all of them. So if I were going to call this a strong top, Jen, no triggers through, right? Or at least 3 divergences confirming a little bit of overrun, not just 2. So what you run into is creating expectations. And let's do this 2 ways. The first way is momentum for the win, guys. I told you momentum covers mistakes. Jen, you took your short directly into all these fibs with no triggers going through. Do you see that? And I'm not saying that that's wrong, but I want you to understand. So this looks a lot like the one that we saw earlier, right? Trading directly into a fib. And it works out. And it goes right to the next fib, and it creates this big honking bounce. And then, Jen, what made you believe that when divergence from a fib at a termination from a bad top, what made you believe that this market was going to continue through? Was it the momentum on the large chart? Because if it was, that's a great reason, isn't it? No, and that's great. But can't divergence from a fib with no triggers through from a bad top at least close the gap up to the large triggers? No, and you'll get that way, and that's why we talk about it. Guys, I don't talk about this stuff because I expect you to understand all of it. Otherwise, why the hell would you be here? Why would you need me? And remember that I have this amazing advantage. I have zero emotion looking at your trades, right? I'm not in the moment on the short. I'm not in the moment on the retracement, on the split triggers, on the gap theory. I don't have any emotion. I get to look at it afterwards and go, man, this is my read. So if you take this first one, it's okay to manage out, right? And then wait for the momentum on the other side. And I think this is where a lot of money gets lost from newer users, is hoping that areas break, because you get lucky just enough to start trading into them. And then, Jen, you're going to be good enough at one point where you get in here and you get out here and you get back in here and you get out here and then you get in here and you get out here, because you know that there's the potential for this thing to bounce and reverse on you. So you're like, let me manage these aggressively until it's clear. And then once it's clear, that's when I'll start holding for those bigger moves. Does that make sense? And the cool thing is we just talk about the challenges so that you know that they're present, which means that it lets you put on a management hat. That's all it is. When you understand what you're up against, when you talk in terms of advantages, it becomes easier. Many times you've been annotating a loss when the win is on and you're missing out. So Andy, if you take a loss, look at your charts before you annotate it. Take the picture. You don't have to annotate it right away. You might even annotate it with a clearer head if you come back 10 minutes later. So take the picture and get back in the game. I like it. All right. So Miss Cindy, strong bottom, 50-50, pulls back directly to support, right inside of favorable large triggers, and you get out at resistance with the weak triggers. Cindy, I couldn't find anything wrong with this trade if I tried. The only potential challenge is that it's not odds favorable, but you are as close to a clear path as you can be, and your area is so well defined, and it is odds favorable on the small chart, and it is odds favorable on the range chart, and you're just going with everything. And because there was a decision made at support, it increases the likelihood that things go up. So I love everything about it. But you're not fighting one indicator. You're going with the flow. And that area is like 90% broken. Nicely done. Let's celebrate a little bit. This is not KISS plan, it's a gap plan. So, Jen, did you really take a lesson from Friday and already turn it into a trade today? So bad bottom, poor low. What's the expectation? The expectation is that from a no divergence, weak trigger, bad bottom, that this resistance in midband could really stop the market. And then you couple that with the idea that the large triggers are more than a full bar away. Jen says, wait a minute, let's close the gap back to the large triggers and go. And Jen, this is one of those times where NASDAQ, I wait for the reversal bar. I wait for the confirmation at the area to at least establish my risk. I don't know that I would leave 5 or 6 points on that one because you are fighting the momentum up. But I mean, that's beautiful, right? That's where I like a little confirmation. Even on the ES, I like a little confirmation. It's just easier. And then one thing, Jen, that you can do, that's a huge stop, right? And you're pretty much saying, if it doesn't go from here, I probably don't want it. Keep it super low risk because you're fighting everything. You're counting on the gap theory. But you had so many great things. You don't have to risk $500, $400 for an aggressive counter trend trade. But this is a pretty good look. This is a great look. It's the gap theory. It's the bad bottom. It's smalls below. It's resistance across the board. All the triggers are under. And you just wait for that little bit to get below. And it's a pretty easy gap. Nice trade. And the fact that you put it's not in the KISS plan, it's the gap plan. You knew what kind of trade you were getting in, so you knew how to manage it. That's what I love. And then when it gets there, you make a decision, right? It looks like it bounced back up once. And now you're just kind of like, ugh, let's wait and see what happens. Great chart read. All right, Matt, we're going to get into it. So what I'm going to do is I'm going to open all of your charts, Matt, and we're just going to make it easier. And we'll go through them. And we're going to look for advantages, and we're going to look for disadvantages, and we're going to look for entries and exits, and we're going to see what we come up with. Sound good? I love that. You know, there was a guy that used to post in the room all the time. That's okay. No, you're okay. Let's just go through them and read them, right? So we already talked about this one. Your 50-50 didn't set up, but the read was perfect. It just didn't give you your entry. And then this one, and I love this. I'm not trading into this termination condition, but I'll trade into this one. Watch this run up on a sit on hands call. Little FOMO, for sure. And then you take the entry at the 1-to-1 below all the triggers. with weak triggers into a termination condition. That's okay. And you're absolutely right. It should have been no trade. But Matt, this is normal, brother. And guys, this is what I got to tell you, is that if you don't get paid right here, you're very likely to try and break your rules. And that's exactly what you did. Notice that you're not inside of favorable large triggers. Weak triggers there. So it's okay, Matt. You annotated it perfect. Okay, and then here we have a termination. Weak triggers, so the expectation is the midband. So you get stopped out into the termination. I like the little sideways space. You tried the final short. So this is 2, right? So what are we doing, Matt? We're establishing right now that you trading into termination conditions tends to cost you more money than it makes you. Is that fair to say? And ladies and gentlemen, if you're watching this classroom, Matt has taken a couple for you here. That's 2 trades into termination conditions that cost him money. And Matt says, but wait a minute, when this termination reverses the market, gives me odds favorable on a 50-50, I'm taking the pullback to support. You got a little jump in? Stop where the market shouldn't go. Easy money, Matt, all the way up to fibs with weak triggers. And the only challenge on this one is you just held it a little bit long. Go do your to-do stuff. Have a good one, Ron. So Matt, let's throw some praise, right? Wrong trade, guys, you have to make the wrong trades to be able to recognize the right trades. You have to make mistakes to grow from them. You have to have challenges to make your brain start processing those challenges. I want to see this trade all the time, right? I want to see you guys take this trade into a termination condition and watch it fail, because it makes you a better trader. It keeps you from taking it, later on down here. And then Matt, you had this great trade where you come through. Oops, sorry, I got ahead. And this is where, Matt, you're going to get to a point where you say, you know what? I'm so stinking good at this. Every trade doesn't have to be a home run. Because if I enter, oh my gosh, these are small. Hold on. If you enter at 58, like you did, right? Or you're in at 64. You're in a little bit big. 64, all the way up to 80. If you decide to get out at this fib right here, that's 16. That's 320 per contract, Matt. Right? And if you wait for the divergence to print, you're still at about 320 per contract. And then you start hoping, here's another termination condition. Weak triggers, right? It's weak triggers over here, weak triggers. The fib just printed. You can't really see it on that one yet. And again, this is a great opportunity to exit, a great opportunity to exit. You just don't have to sit through all of this. It's okay to get paid, right? It's okay to get paid. It's okay to wait for the next best trade, because you're good at this already. You're good at momentum. You're good at a clear path. You're good at an entry. And now you're going to get to that realization that you don't have to hold through the nonsense, because you're better than that. And then from here, let's see where we're at. Bad top, 50-50 fails. Odds favorable. 90% of the triggers through. Perfect entry. Stop placement. And then once again, it hits the fib. It didn't hit the fib. Target didn't hit and it rolled. So let me see where your triggers were when you got stopped out. That's okay. So Matt, 50-50 trade. Because of the good bottom, you take it with divergence. One of the ways that's nice to manage, and when you go through and you learn this a little more, let's just turn this into a management plan because the entry is great. When you get to this divergence high, it's a great place to take a portion of profits, but you're only in a one lot. So when you get to this divergence high and the triggers haven't broken yet, this is where when you grow with the software a little bit, Matt, you're going to say, okay, it's still not really a clear path. So I hit my trouble spot. This is where I would take first contracts. If a second divergence prints, I need to exit, which means that, Matt, it puts you in the mindset. It's not the perfect highest probability trend trade. You've already had one divergence. Second divergence is true right here. If nothing else, you can get a little more out of it. You can stop giving back quite so much because you'll have expectations based on the look. Does that make sense? The entry's spot on though, right? Your entry and the same guy that wrote the software are exactly the same. Open up. It's not opening up for me. You and the guy who wrote the software took darn near the exact same entry, almost the exact same price. The only difference is that he took one off there, and when it didn't quite make it, he got paid up top. He's getting paid. And you'll get to that point, guys. The more comfortable and confident you become with your looks and your rules, the more comfortable and confident you become with taking an exit because you know you're good enough to find the next trade. And that's kind of it's a pretty cool feeling. And then we get weak triggers. This is kind of a rough look. I don't hate the look, Matt. You've got momentum. The large triggers look like they're riding up. Divergences don't bug me so much. The one thing that gets you on this one is I notice that you're on the NASDAQ. And one of the biggest challenges with the NASDAQ is, so on the NASDAQ, Matt, this is a 13-2 chart. On any other market, crude, S&P, gold, RTY, soybeans, feeder cattle, your 13-2 is the large chart. But because it's the NASDAQ, because it moves so fast, your 13-2 is your entry chart. It's playing the role of the 5-1. Over here is a 34-5, and that's because the NASDAQ moves so stinking fast that it's difficult to trade with the 13-2, 5-1. So Matt, there's this nuance on the NASDAQ where if the small triggers are less than a full bar away when you get to the area, especially if they're strong against you, more often than not, you're going to get absolutely slaughtered on it. And this is actually in the spreadsheet. If you go to the client trade section, for you NASDAQ traders, there's a whole section dedicated to NASDAQ. And what you'll find is that you can use this reversal bar marker, and if they're below it, I'll sit on my hands when I get to the area. If they're above it, I'll go with the area, and that's the very simple term, but you guys can go through there. And this one actually shows two entries, and I think this was Jen that showed us this great one. When you get to the area, the small triggers are so strong, you wait for a close on the correct side, and it becomes easy. And then if you get to the area and they're more than a full bar away, you get in at the area and it becomes easy. So Matt, it's a great looking trade. It was that little NASDAQ nuance that got you. It was that little thing that's pretty specific to the NASDAQ that took you out of play on that one. And then here, NASDAQ again, termination, strong triggers, potential to break. There's that pullback right to resistance inside. And the small triggers are a full bar away. Pretty cool. So it's not quite a clear path. It's a 50-50. It's a perfect entry. Great stop placement. And Matt, do you see how the small triggers are a full bar away? That installs a lot of confidence for me getting in at the area on these NASDAQ trades. When those small triggers are a full bar away, it's a huge indicator. It loves to close the gap. Because what happens is if you look at like a crude oil chart, or here, just even this one right here, on this particular look, and this is gold, guys, is it fair to say that most of you on the large chart here wouldn't really think about going long against those triggers on the large chart? And this is what I want you NASDAQ traders to get. This look, and see how they act as resistance on the large chart on gold. It's your small chart on the NASDAQ. So it's the same concept. Great stuff, Matt. I think we hit all the pictures. A lot of great trading, couple management opportunities. And as you trade throughout the day, man, keep posted. And hopefully that's helpful. And then CAV. Triggers above the blue fib. So not a clear path. You're 50-50 on the divergence high, Cav. You see it? You're above the fibs, but you're 50-50 on the divergence high. But you have no divergence. When you get to the area, you jump in a little early. You don't wait for the area. If you had, you got a better entry and more room to the target because the small triggers were a full bar away. And guys, I want you to see language. Price pullback from nowhere, doesn't matter on the small chart. Place limit order inside favorable large triggers. Not place the order at an area inside of favorable large triggers. And does everybody see where it went to? The area inside of favorable large triggers? Cav, I just want you to see this one. I want everybody to see this one. It wasn't the favorable large triggers, guys. It was the area inside of favorable large triggers. That's where we expect the bounce to come from, not from the triggers themselves. So all that does for you, Cav, is in the long run, is it gives you less risk and it gives you more profit potential. Isn't that cool? What a great thing. Still no trades, mixed triggers. It's just garbage, Jen. Great job sitting on your hands doing nothing. Just garbage triggers. Large chart has to lead the way. Tony, bad bottom, 50-50. Smalls are inside of the large. It's not really momentum. And then you go long again. Divergence, wait, no trade. I like it. Guys, I love you guys trying to anticipate these breakouts, right? This is where you have to ask yourself, what's the likelihood of mid-band and resistance breaking from a bad bottom? It goes down dramatically. If it's a 50-50 trade, shouldn't I have odds favorable momentum on the large and the small? And if I'm going to take a momentum style trade, doesn't it make sense to have momentum on 3 charts? And Tony, your management is great, right? Quick little pops, boom, boom. But you never cleared trouble. You never gave yourself the best fighting chance possible. And you were able to get a little snippet and then you gave it right back. One of the things that keeps me out of momentum trades, guys, is my mentor said, Mark, if you can't show me momentum on 3 charts, you don't have a momentum trade. If you can't show me momentum on 3 charts, odds favorable momentum on 3 charts, you don't have a momentum trade. You're just hoping. I believe him. Good top or bottom? No. I like the annotation already. Muser, this is you, huh? I like it. Odds favorable on the 13? Absolutely. Clear path? No. 1 divergence, perfect entry. The resistance on 13.2. More terminations plotting on the 5.1. No such thing. Muser, the only termination condition on a 5.1 is 3 divergences in the same price range. All you're looking at is fibs. So what you have here is a 50-50 trade. And you have a 50-50 trade that's from a bad bottom, right? So it's less likely to work a little bit. And then you've got divergence on a 50-50 from a bad bottom, which means that it's even less likely to work. Which really means, and that your triggers are split, which means that you're just kind of like, it's not the best. And what is this, the ES? And this is one of those instances where having your synthetics on your large chart, you would see that right here at divergence, there was also a fib at 20. So is a 50-50 at the divergence high, at a fib, with divergence from a bad bottom. I'd miss this trade all day long. Wouldn't feel bad about it. Wouldn't even faze me. But then when you get up here and you get above the areas and you've got a lot more room, everything agrees you can take that little snapback potentially. The most recent checklist with the links on the website. Oh, you want the spreadsheet? Here, I'll drop mine in the room for you right now. And guys, I've updated a lot since the last time John put it on the website. You guys have to remember, I update it every day. I update it every day with you guys for the most part. So I drop mine in here every day. You can update yours. The goal is that you're creating one and not just relying on mine. And Muser, this isn't necessarily where I just arbitrarily trust the large chart. I've only got two scenarios in my arsenal. Rules met and rules not met. So Muser, do you have rules to take a 50-50 trade right into resistance? And technically that was probably a termination with split triggers and divergence from a bad bottom. Do you have a trading plan that says this is my trade? I don't. I don't have one. I don't offer one in the room ever. It doesn't mean that it's not a trade, right? That might be somebody's trade. But that's not my trade. There's too much wrong with it. I'd rather just wait. I'd rather wait for this trade where I'm not trading into the area, but rather from the area. Does that make sense? So when you're trusting the 13.2 and all the momentum, why not trade from areas instead of into areas? A little bit of patience there. It's a good read. And I think, did you have two pictures? You did, okay. And this is where my brain goes. I just talk about advantages. So Muser, you've got a bad bottom and it pushes you up, but the market continues down. So you've got a 50-50 to the downside. Good top or bottom? No. Odds favorable? Yes. No terms on the 13.2? 50-50. Entry inside of favorable large triggers? Well, they're split, right? Is it going to go to the synthetics or is it going to bounce off of this? Left eye says yes, right eye says no. So Muser, and we talk about this every now and then with these split triggers. When we see the areas, is this look worth a shot if you get a reversal bar right from where you're expecting the market to continue? Is it worth a shot? Because a reversal bar establishes your risk, right? A reversal bar says that it's going in the direction of the large chart. A reversal bar says that it's going with momentum. And because it's no divergence in those one-to-ones and it almost hit the synthetics and you get this is where your plan will develop. It says, hey, look, I do have a 50-50. It doesn't have divergence, but I'm having a little trouble defining my entry point. Let me let it confirm, and then I'm willing to take a shot. Does that make sense? That's where you can take your great chart read, and even though it's not perfect, still find a way to take advantage of it. Cool. And then Miss Jen, 2 trades, 1 loss, 1 win. So the first one was odds favorable, clear path, pull back to support. And then you tried to take the momentum without momentum and got run over right at the mid band. So you re-entered and then you got in. No, I got it. I do this for a living. First trade came from right here. Odds favorable, clear path, no divergence, right to support inside of favorable large triggers. This one is 100% go, 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 go. You missed the entry. That's okay. Sometimes we miss trades, Jen. Everybody has to go to the bathroom, the dogs bark, whatever. And then when it starts to break above with the momentum, you said, you know what? I'm going to try one of those momentum trades. I'm going to try one of those little snappy, pull one over on them trades. Is that right? Looking at your newly painted nails? Pictures or it never happened. Share your nails. Not really. But so you're looking for that little momentum, right? That little pullback and continuation. Is that fair? Cool. So Jen, let's do this real quick. If my small triggers are inside of my large triggers, and this is just a general lesson, and I know that you know this, I don't have momentum on this chart. So I'm taking a momentum trade without momentum, right? And with that loss of momentum, I expect a deeper pullback. Cool. So we just eliminate the FOMO, and FOMO happens. And guys, you're going to FOMO yourself out of existence every now and then. You're going to have days where it just doesn't feel smooth, and you're okay. And then you take it back up to the trouble spot. And I think that's perfect, right? This loss of momentum says, hey, we may push lower. This momentum says, hey, we're probably going up. So you find your balance point where you wait for it to bounce off of the areas and go up. No worries. Catching this one from here to here, though, that's the easiest one, but you're checking out your nails, and that's cool. And then you just have to be a little patient. And guys, I say this about 1,000,000 times a week. If you're trying to take a momentum trade without momentum, you should probably be waiting for a trend trade. That's it. If you're trying to take a momentum trade without momentum, you should probably just wait for the trend trade and be okay missing it if it doesn't set up. Three divergence. I see 2. So this was your entry here, right? And then you get weakened triggers and a pivot stop out. And Jen, you still could have taken this long because you have momentum and a clear path. Everything still says up. You have an area inside of favorable large triggers. You just have to manage it a little more aggressive because the momentum isn't there. Does that make sense? This still fits the rules, 100%. There's just not a lot of room anymore. Wait, Jen, wait. And it's okay to wait. It's all right to not be in every move, ladies and gentlemen. Zorro. Zorro says 8608, 8608. So Zorro, you're saying that when everything is up and the area is pretty much cleared, see how you jump in without momentum and it pulls back to the area? So Zorro, you were looking for a momentum trade, right? Is that correct? You were thinking, I'm going to take one of those great momentum trades where everybody gets in and they get paid. So Zorro, is that odds favorable? Of course not. Neither is that, right? So the same thing I just told Jen. If you have odds favorable on every chart, do the little snappy, make that money, right? Ride the momentum. But if the momentum is gone, you may be better off waiting for a trend trade. It doesn't mean that there's not a trade, guys. It just means that you have to wait for the right trade. Does that make sense, everybody? I think this may be the best lesson that we got today. Let me make you guys a big honkin'. If you do not have odds favorable momentum on all charts, stop, for the love of it. Stop trying momentum trades. You have, I can't spell. You have to be patient. Let it turn into a trend trade, or simply don't take a trade if your rules aren't met. So guys, we've seen it 4 or 5 times today already. Trying to take momentum trades without momentum. When momentum trades fail, they typically become trend trades. If there's not momentum there, you should just wait for the trend trade. And guys, if momentum's not there, it's not even a high probability trend trade. It's a medium probability trend trade. Oops. That's the hardest part, Jen. I've always said that. The hardest thing that you will ever do as a day trader is absolutely nothing. The most difficult part is sitting on your hands and doing nothing, because we're taught that in order to be productive, we have to be busy, right? We have to be busy. I'm sorry, Paul. Thank you for telling me that. Guys, I miss charts every now and then. If I ever miss your chart, you gotta let me know. Thanks, Paul. Let's go get it. I spend hours some mornings. I'll wake up at 5 a.m. and guys, your class starts at 8 a.m. my time. And I have spent 3 hours and no trades. And I come into classroom and I haven't taken one trade. And there's days where I hit my goals before I ever come to the classroom. And the thing is, exactly, busy makes money, right? This business is the opposite. Busy costs money. All right, let's see what we have, Paul. I see a lot of strength on your 21. I see a little weakening on the large chart, but the 21 says, hey, we're going, right? And then this is that momentum trade without momentum, but it's just a little pullback to resistance inside. So Paul doesn't jump in because the momentum isn't the best. Paul says, hey, check this out. I can take it right back to resistance, enter at the area, and take it down to support. And Paul, can I ask you, what advantage does having 4 different mid bands give you on the chart? Just curious. What advantage does having outer bands give you on the large chart? Do you have so many rules for a trade that on your large chart you need to know where an 8 range midband is, or a 13 range midband, or a 21 range midband? Do you need 3 range charts worth of midbands on a large chart to be able to take a high probability trend trade, to be able to take a momentum trade, to be able to take really any trade? And I ask this, guys, you can always set up your charts any way you want. But when I look at a large chart and I'm a brand new user, guys, it's already enough to see if I was coming from a strong top or bottom. And it's already a lot of work to determine whether or not I have momentum or not quite momentum, right? But that's all I need from the large chart is, did I clear the area? Do I have momentum? Does that make sense? So check this out, guys. Cleared the area, and the momentum is still there. So Paul, let me ask you, so what you're saying is that last girl you dated stabbed you in the thigh with a fork, stole your wallet, slept with your best friend, kicked your dog, and burned your house down, right? But you're still gonna hang out with her? Aren't you with me now because maybe all of this stuff didn't serve you the way you thought it should? But she was hot. But this is it, right? I don't need this to be successful with a high probability trend trade. And this is just this is cleaning out the closet, man. The relationship's over. I don't need these outer bands to be successful. I don't need this mid-band, or this mid-band. I don't need whatever this may be. I have no idea what it is. What else don't I need? I don't need this out here. The only thing I need on this chart to make money, Paul, is momentum and a clear path. Does that make sense? So I'm not trying to tell you to change your ways. I'm not trying to tell you, Paul, get rid of all this stuff. But there's the idea that the more things that you give yourself to think about, the more difficult it becomes to catch the easy ones. The more difficult it becomes to follow rules. And I love a 21-3, right? What are you using the 21-3 for? Momentum? That's the whole purpose behind it, right? So why do you have outer bands? And what the hell are these triggers? So, I mean, Paul, do you, man. Do whatever makes you happier. But check this out. This isn't the perfect momentum, so I confirm it with this momentum. This path is clear. This path is clear. And this is an area inside of favorable large triggers. What is this? What is that? What market is this? Crude oil at 946? I want to go back. I want to see something. My freaking Ninja Trader's not even up. And guys, I promise, you can do whatever you want. But if I see you repeating behavior that I've found to be counterproductive to others, I'm at least going to mention it. You don't have to change, Paul. You don't have to get rid of all these things. But so I used to have a guy in here, and what he did is he had a range chart. Or no, he had a 21-3 chart, Paul. And he put it on there because he saw somebody else use it. And every chance he got, he traded directly into termination conditions on the 21-3 chart. And I finally asked him one day, I said, why do you have it if you ignore it? And he goes, I saw so-and-so with it, right? And I was like, okay, do you need it? So Paul, if you're trading the KISS plan, you don't need a 21 chart. But I like the 21. I like that. But oh my God, you have 34-5 triggers too. That's such a slow moving chart. So, and again, do whatever you guys want to do. And that's the important thing. Do what you guys want to do. It's okay. But make sure that if you're going to give yourself 1,000 things to process, that there's at least some value in it, right? That there's at least something going on. So at 946, I want to see what that looked like on this chart. And I think eliminating clutter isn't bad. No, Jen, the only thing that we did that 21-3, you got it, Paul. The only thing that we built that 21-3 for was because someone in the room was looking to take gap theory, the gap theory. Paul, what time frame are you in, my friend? Are you in, or when was that trade? Was that yesterday at 946? It was today, Eastern or Central? Eastern. And it was crude oil, yes? All right, so you and I have different fibs. So this was it right here. One of us is wrong or needs to clean out or has different days back, and that's okay. It's probably me. So your large chart said everything down with a clear path. And you had, and let's just draw it in because it makes even more sense for you. You had a fib right there. So Paul, did you need anything else with a clear path, the tail end of momentum, and a fib inside of favorable large triggers? No. And that's all I'm saying. I like the 21, confirm the momentum. That's cool. Like I'll support that all day long. But I have a termination, 50-50, one divergent, split triggers. Guys, where's it going from? Is it going from the areas floating in the middle of nowhere? Or is my best shot from the one-to-ones that are actually inside of triggers? What do you guys think? Price may correct here, and it may correct here. Only one line is inside of triggers. Does it make sense to wait for that line? Or, remember we talked about confirmation on a split trigger. If you're hell-bent on entering from resistance, maybe a reversal bar or something, right? I think it's like 140, Cav. Get me here. So my stop's where the market shouldn't go. It's a 50-50. I got in 2 ticks below resistance inside of favorable large triggers, and I only have to make it, ladies and gentlemen, to 99 to make $100. If I get a reversal bar, I reduce my risk. I'll put my second target at the fib. Is this a high probability trend trade, ladies and gentlemen? What do you think? Is it a high probability trend trade? Of course not. It's a medium probability trend trade. But it has the advantage of a termination that created a reversal. It has the advantage of odds favorable momentum. I waited for the area that was actually inside of triggers. I've got a conservative first target, second target, and at this point on a medium probability trade, I could even say, you know what? If it doesn't go from here at this point, I don't want to be in it. Or I may say I'll keep my stop where it goes. But it's not high probability. And you have to know what you're getting into so that you know how to manage it. There's my reversal bar. I reduced my risk. I've got 4 ticks of risk. I'm $100 in the bank, and now I'm break even, and I don't have a damn thing in my way until Fibonacci support, except for this little run right here. So at 99, 89, guys, that's $200. There's nothing for me to do per the KISS plan. It was a 50-50. It was from a good top. It did have a divergence. I waited for the area inside of favorable large triggers. I followed a pragmatic approach to stop placement. I took quick profits, and I'm either going to hit my second target or I'm not. And how wonderful is that? That was $300. So guys, this is what we do. That's 2 charts. Because of the good top, because of the termination that reversed the market, I'm willing to go against one divergence. Because it was a line inside of triggers and it hit it to the tick. Guys, that's it. If you can't do this yet, damn it. If you can't do that yet, stop chasing other trades. If you can't read your charts that quickly, identify the advantages, identify the challenge, know exactly where you're getting in and know exactly how you're going to manage it, then you're doing yourself a disservice. Slow down. Take a deep breath. Figure out how to find the best of the best. Figure out how to find the highest probability, the best chances of success. So your 50-50 trade says from a good top or bottom. That should be the first thing. We had it. I did have odds favorable momentum. I did have odds favorable on the small chart. And because I had divergence, I had to weigh out, am I willing to take it with one divergence because of the good top or bottom? And the answer is yes. And check this out. It didn't make Fibonacci support. So thank goodness I said, I'm not going to worry about hitting home runs. I'm going to make my $300. It's still a 50-50. And there's divergence. Look at those split triggers. It's ugly. So you've got to be able to react on the first one. You've got to be able to react on the best one, because the more it fluctuates on problematic trades, the less likely the trades are to win. Guys, that was an awesome example of a 50-50 trade. That was an awesome example of understanding that split triggers, I don't know where it's going to correct, so why not get the one with the lines in it? I do the same thing you guys do. That's what a lot of people don't realize, is that I do exactly what you guys do. Every day, I have to read my charts. I have to ask myself if it's a trade. I have to look for advantages. That was $300, guys. There's 5 trading days a week. There's 252 trading days a year. Is that right? Did I do that right? Try that again. I think I messed that up. $300 a day times 5 days is $1,500 times, nope, weeks. We need weeks. 52 weeks times 1,500. I stink at math, even calculators. How does 78,000 sound? By just following rules. Yeah, guys, don't let me tutor your kids in math. I'm no good at it. But I'm pretty good at patterns. I'm pretty good at teaching patterns most days. But here's what you have to do. Are you ready? This is the hardest thing that you'll ever do. Is you have to ask for help. If you need help with momentum, you have to ask for help. If you need help with whether it's a clear path or a 50-50, you have to ask. If you don't know where your entry should come from, you have to ask. But most importantly, you have to understand what kind of trade you're getting into so you know how to manage it. Guys, I'm going to take 5 minutes. And in that 5 minutes, I'm going to stretch my legs and hang out for a second. I'm going to pull up the NASDAQ while I do. You guys, if you have questions, post them in the room. If you have pictures, post them in the room. If there's something that you would like to discuss in the last 30 minutes of class, post it in the room. But I've got to go refill my water real quick. My throat is dry. I'll see you guys in 5 minutes. But I could. All right. See you guys later. All right, guys. Let's finish strong today. Gino, let's see what you did. Dun da da. Gino caught a great little 50-50 with lots of resistance above. Gino says, and our charts look different, Gino. So you had a bad top on a 50-50. With no divergence, split triggers, you get in between the areas instead of the high area. But you say, man, with that high area, let me double up. You make money, and when divergence prints, you exit the 50-50. Gino, perfect, 100%. Couldn't do it any better. I like that you said, you know what, I'm going to get in at the low area because I don't want to miss it, but I'll get in at the high area too, because honestly, this is kind of sexy. And there it is. That's awesome. I love seeing that. You guys will get that confidence too. Nice one, Gino. And then just saying, it's not a home run trade. Let's make some money. That's the easy one. That's the easy one. Guys, it was so easy I could do it. And I'll tell you what, I'm not that smart. Left the 51 midband since it's your, the 5-1 midband. How's the house cleaning look? You like it. Clean, open, refreshing. 13-2. So, Paul, you left the 5-1 midband, right? But the 5-1 mid, and I love this. This is a great look. But the 5-1 midband has to be inside of favorable large triggers. Doesn't it? So if you can't see the favorable large triggers, I guess what this might do for you, Paul, is if that midband is up here inside of the synthetics, then you know that the midband is inside of favorable large triggers. But when it's not, this might keep you out of a trade because we saw that there was an area inside of favorable large triggers. So now, Gino, it is, isn't it? But it's not hard to make money on any market if you know what you're looking for. It's not difficult to make money on any market, and you still have to be patient. And yeah, so that's cool though, Paul. If I think this is great, that's so much easier to read. And it just keeps you from really having to make 1,000 decisions about things that probably aren't as important as you would like them to be, if that makes sense. I'm getting rid of everything. I'm going to try and reload again. So yeah, I think that's awesome, man. I know I've got some new people in the room. I know that I've got a couple of you folks that just joined the party. Cav, so you got it, Paul. So here's an idea that you guys may like, right? Who has patience problems when they trade the NASDAQ? Anybody other than me? Even on a market that fast, you find yourself trouble being patient? So why not go back to crude oil or the ES and learn that level of patience, right? So if you're impatient on a market that is absolutely scrambling, guys, why not do some exercises for your patience? Why not do some exercises that help you remain calm and that keep you waiting for the best and force you to not be in every move, right? Trying to think. So I don't know, and you guys don't have to, but if you're like, okay, it's it's so fast and it's so busy and there's so much going on and I still can't wait for the perfect trade. And the perfect trade, guys, they happen on the NASDAQ a lot, but you still can't wait for it, then patience may be your issue. So maybe force yourself to be patient. It's like an old, I don't know, what's his name from Shawshank Redemption? Um, I can't think of his name. Plays God in every movie. Morgan Freeman. Yeah, and there's a part we were watching Evan Almighty the other day, and he's like, if you pray for patience, God doesn't just give you patience; He gives you the opportunity to be patient. And trading is the same way, guys. You need to seek the opportunity to be patient so that you can learn how to be patient. And the NASDAQ moves so fast that you believe that there's a million trades. That was my biggest downfall on the NASDAQ when I first started trading it, is because it moves so fast, I convinced myself that every move was a trade. I convinced myself that every top was a short and every bottom was a long and every this was a that and theses were thoses. And the reality is it's just not the case, right? So if you need to learn how to calm down a little bit, follow a plan that keeps you calm. Follow a market that forces the hand, right? That forces you to be a little patient. Convince yourself that your only options are rules met or rules not met. And this is just, again, guys, I'm not giving you trading advice or telling you how to live your life. But if I know that my team keeps losing because I suck at free throws, doesn't it make sense to go work on my free throws instead of trying to do the slam dunk that looks cooler on the highlight reel, right? Um, all right, Tony, tell me if I'm reading this right. You said, and it's hard to tell, but from what I see right here, is you said on the wrong side of small synthetics with the large down with odds favorable momentum, this blue line is going to give me a winner to the upside. So if you were writing rules for that, what do those rules look like? Now the flip side, if you said, I let the area hold, and my small triggers roll and my large triggers roll, and I take a no divergence pullback to the one-to-ones because I suspected this was going to be a potential reversal point. So I'm going to let my small chart confirm the reversal. Notice you pull back to the one-to-ones, odds favorable, no divergence. And then you've got wiggle room, taking it from the area. The first one is, man, I hope this shit works out. The second one is, all right, the bottom held. My small triggers rolled. It creates an opportunity. Does that make sense? I hope that makes sense. Cool. How does anticipation work out for you long term? Just curious. If you take 100 anticipation trades, I hope support holds. Shit. I hope support. Ah, rats. Sure hope resistance. Son of a gun. This one-to-one's got a ew, right? So again, that's that patience piece. Tony, you are such a great chart reader, brother. I've been watching you do this forever. That you know this has the potential to reverse the market because you understand termination conditions, right? You know this has the potential to stop it. You know it has the potential to create an untradeable bounce, but it's never guaranteed. So when these small triggers roll off that termination, hell yeah, dude, start looking. You're in the momentum phase on the giddy up from a termination. Anything before that is just hope. And these are the ones where I find people, once you learn how to eliminate that trade from your little repertoire here, life gets a lot easier. And it's the difference between I think resistance will hold and resistance held. And very often what you find is it's almost the same darn price with confirmation. And you see that a lot where I think the area might hold, right? And it goes up to the mid band and there's your gap theory. And nobody's going long here because it's just ridiculous. And sure enough, it comes all the way back. And now we're 50-50. And there's a divergence. I love, guys, it feels good to be first, right? It feels good to be first. It feels good to be in on the low tick because you're like, oh, I'm untouchable. I'm invincible. But what you find is for every one of these that works against strong triggers, 10 of them don't. Is that fair? For every one of these that makes you feel like a god among men, 9 or 10 of them run your ass over and you don't share those in the room. That's my story anyway. Yours doesn't have to be the same. Because if I did the same thing right here, I just got slaughtered. That's the same look. Here I got beat up. There I got lucky. So guys, always do you. Don't let me tell you how to trade. I don't want to tell you how to trade. But I do like to talk about advantages, and I do like to talk about patterns that repeat themselves. And there's an easier way, right? There you go. Anticipation becomes qualification when you get confirmation. I like that. And now we had a 50-50 with divergence. And then we get a second higher divergence on a 50-50. And now check it out. Now those small triggers are starting to come up. Now we're starting to see, well, this might hold, right? It may hold, but it's still not time, not quite yet. Cav, thanks for being here. And then Roku, good bottom, higher divergence. Don't worry about the background colors as much as you're worried about momentum. 50-50s happen here. So you let the area clear, and then you got out of trouble, and then you let the area clear. So Roku, I just want to make sure, because it's a little tough for me just with the read. I just want to be sure that you understand that 50-50 is a term that describes the large chart and the trigger location. So this is a good bottom. This is a 50-50. That's a medium probability trend trade entry right at support inside of favorable large triggers off of the good bottom. This is catching that first pullback off a good bottom with the second higher divergence. And then I like the exits, good stuff. I just want to make sure that you got it. I want to make sure that you're comfortable with that idea and what you're looking at. And then guys, there's your 50-50 that fails, 2 divergences. And then Tony, if you wanted to take a chance with an area, that's the momentum style trade. It just doesn't have much room to run. So trading from the one-to-ones instead of into the one-to-ones typically works out. Yeah, no worries, Roku. But see how it didn't break the one-to-ones here? And guys, this is NASDAQ. It's a different animal. And that's a termination. And there's going to be days where it soars through it and it goes right through it. But this is where I say, man, let's let it break. Let's see what happens. Let's force it to give me the best look. Let's absolutely, positively insist that it gives me the best of the best. Oh, I thought that I had crude oil up. Sorry, my bad. And the easiest way to do it, ladies and gentlemen, is with the KISS plan. The easiest way to do it is with the KISS plan. So Tony, this is where you went long. How many days back are you? I'm 10. So that could be part of it right there. If you're 11, you're giving it a whole nother day's worth of information, which could be 1,000 different swings to create fib areas. And then Tony, check this out. 1, 2, 3 divergences in the same location. This is where you can start getting a little more aggressive with things. But if you're 10, I'm 11, so we'll probably never match. Whoops. Trying to get over to NASDAQ real quick. Still a termination, isn't it? Jen, I probably just ignored you. You know how I am, right? So 50-50 from a bad top with divergence. You took a shot and got out of trouble. I love it. Jen, I don't think you could have done this one any better. It's medium probability. So on its own, it's medium probability, right? So a 50-50 from a good top. So let's talk about this. And this isn't really a reflection on your trade because I think you did it perfect. So a 50-50 from a good top, no divergence is the best. So a 50-50, not good top, no divergence is a little worse. So a 50-50, not good top with divergence is even worse. And then so on and so forth, right? A 50-50, bad top, to divergence, egads. And I'm saying this because when you know what you're getting into, like Jen knew what she was getting into here. She knew that it was a bad top, and that makes it a little less likely. She knew that it was divergence, and that makes it a little less likely. She still chose to enter, right? Because she's bored. And then she says, I don't have confidence in this trade because of all the things going wrong. I'm just going to jump ship. Does that sound about right? Do you guys know when you move your stops the fastest? Is when you know you're giving up advantages because you know it isn't high probability. And what you guys don't realize is that's not a bad thing. Jen, it's not a bad thing that you said, you know what, I'll make $100 and get the hell out. Because it's not the highest probability trend trade, because I'm giving stuff up. Egads, it's an exclamation from probably the 1800s. So picture a guy with a big white beard and a nightcap, and he stumbles upon a body in the woods and he says, egads. Yeah, something like that. So I like the trade. It's just an old expression. Egads. Like gadzooks or yikes, zoinks if you're a Scooby-Doo fan. But I'm using Jen's chart here, ladies and gentlemen, to remind you that if you know what you're getting into, what level of less than high probability is this, right? What if it was weak triggers? She'd be even more aggressive. And it doesn't mean that this isn't a great trade. It doesn't mean this isn't an outstanding opportunity to try to make some money. It just means, Jen, it's all right to make a couple bucks and get the hell out, right? And you recognize that. But earlier today, do you remember when you traded directly into the fibs and you had divergence and it was a bad top and you held that one forever. So you find yourself where you're taking the same look and reacting differently. Is that fair? You're taking a very similar look, but you're reacting differently. And guys, you don't realize this, but I recognize that. So when I recognize that, I go back and I remind you guys, have rules, right? Know not only why you're going to enter the market, but understand why you would exit. And if you don't know what kind of trades you're taking, then the management becomes more difficult. Guys, I love everything about this trade. And Jen, you even had the small triggers a full bar away. And you managed it beautifully because you understood the challenges, right? And guys, we'll abandon advantages when we let hope or opinion lead the way. So if you find yourself in a position where you're like, man, it's either met or they're not, right? I've got one way to take a 50-50 for now, and I'll let that grow as I grow. Maybe I'll let this grow when my account's up 10 grand. Maybe I'll let this grow when my win percentage is above 60%. Then I'll start looking for the next entry. And I don't say, you know what? I can't really catch this high probability trend trade, and I'm not so good at the 50-50 trade, but I saw John Novak posting this momentum trade. Let me figure out how to take that. I saw Jen take that gap theory trade. Let me add that one because I watched her make money. Guys, you've got to stay in your lane, and your lane is a reflection of where you're at learning to read the software. And everybody's going to get to where they want to be as long as they do the work. So do the work, post the pictures, ask the questions. Don't trade in termination conditions. Don't fight momentum in the beginning. You'll learn when it's okay to do it, guys. Do I ever look to left of the chart for fibs? Like, yeah, show an example. Because I have another monitor, and I'm looking at Bob and Cindy staring at me, and Roku's got a book on his head. And Zorro's looks like Cousin It with all his hair, and Rob is smiling. He's happy to be here. And Gary was 22 getting in the Navy. Let's see what you got, Miss Jen. And then Debbie says, you know what? I haven't shown you kids how to do it lately. Odds favorable, clear path, pull back to resistance inside of favorable large triggers. Second higher divergence pushes it right to resistance. Debbie gets out of trouble and gets out again when things go a little wonky. And lets the last one run and finally says, you know what? I give as we're losing momentum. I like it. And this is one of those ones where you get in here, you have to make a choice, right? Am I going to exit with the second higher divergence, or am I going to hold it? And because it's a clear path, Debbie says, I'm going to hold it. And it works out great. And then mid-band inside of favorable, maybe not the best spot for a stop. And she realizes it. She goes, hold it, I got to get back in. This is the right one. And carries it down. Nice job, Miss Debbie. And does everybody see how the large chart led the way? 100%. The large chart told her what to do. So Jen, remember when you were 18 and you were smoking cigarettes outside of the diner? And you kissed that boy that's not your husband back in 1987? Has nothing to do with this. Has nothing to do with it. This divergence at 2:30 yesterday afternoon has nothing to do with anything over here. Nothing. You know which divergence has something to do with what's going on? right here. Now the flip side, Jen, is if I'm trying to make a decision about going long, well then right here, this fib may have something to do with it. Does that make sense? If I open up my large chart, I don't care about this pivot stop out all the way up here. It's already done everything it's going to do. And these quit printing for a reason, because we don't need them anymore. So, good stuff. All the trouble I got into as a teenager doesn't affect how I am as a... It's too far back there. Let it be gone. And look at this market, caught in between. It's just ugly again. Ugly, ugly. Guys, that's it for me. I just looked at the clock. Did I get everybody's charts? Did we answer everybody's questions, at least for today? Guys, a lot of great chart reading today. A lot of great chart reading today. And I'm really going to try and stress the idea that the better you are with annotating what you see, the easier it becomes to see what you need to see. And the less you give yourself to think about, the easier it becomes to find the trades you're looking for. So we're going to come back tomorrow morning and we're going to do it again. And we are going to...